wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, egg prices surging 15% in the month of January and 55% from last year due to the bird flu, killing millions of egg-laying chickens. Now, that's not the only thing costing more. In fact, U.S. inflation picking up broadly at the start of the year, further undercutting chances of multiple Fed interest rate cuts this year. At the same time, the Trump administration presses forward with tariffs. A lot coming at us. Fed Chair Jay Powell was back up on Capitol Hill in his semi-annual address to Congress on monetary policy. He was asked about today's read on U.S. consumer prices.
We're close, but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now.
All right, that, of course, is Fed Chair Jay Powell earlier up on Capitol Hill. Here with a look at today's read on U.S. consumer inflation and really the reaction in the rates market. That's really a big part of today's trade. First up, we've got Bloomberg News international economics and policy correspondent Michael McKee today in our D.C. bureau there for day two of Fed Chair Powell's testimony. And then also with us is Bloomberg Intelligence Chief U.S. interest rate strategist Ira Jersey. He's there at BI headquarters in Princeton, New Jersey. First up, Mike, we got to get to the data. Lay it out for us. How hot was inflation really? And what drove it? Was it all about those egg prices?
No, egg prices drove up the cost of food, true, and I understand you've set aside some eggs like Bitcoin to, let them go up in value. But what it really was automobile vehicle stuff, used cars up 2%, and motor vehicle insurance up again significantly after a month where it wasn't. We also saw housing not go down, housing prices not ease, so that added weight to CPI overall. And then there were some unusual categories that we have seen become usual recently. Airfares were up, and lodging away from home was up, and those were kind of unexpected. So there are some reasons, if you want to be optimistic, to think that, okay, some of those weird things could go down, and housing sooner or later has to go down. But the bottom line is, Jay Powell said, we are close, but they're getting farther away.
Mike, okay, Ira, we're gonna get to you in 1 second, but Mike, one more detail here. You say eggs did not drive this. Other things did, like autos, auto insurance. The thing about autos and auto insurance, yes, we pay auto insurance once or twice a year. We pay for a new auto or a used auto, gosh, depending on, who you are, maybe every 5 to 10 years. You pay for eggs. A lot of people pay for eggs every week. So that is what they are seeing. That's what they're experiencing. What does that effect have?
Well, that's probably one reason why we saw something like the University of Michigan's Consumer Sentiment Index show that people thought that inflation was rising significantly, would be significantly higher this year. Eggs, groceries, gasoline, those are the things that people look at. So on a political basis, and I'm using a small p there, it is an issue. Economists will look at it a little differently, but Americans don't seem to like the way economists think these days.
All right, well, Ira, come on in, because investors looked at the data this morning, and in the bond market, U.S. Treasury market, they were like, whoa, and they sent rates higher. Talk to us about the trade that we saw. And I am curious, what are the levels that you ultimately watch to indicate either a ceiling or a floor when it comes to the U.S. Treasury trade?
Sure. So Carol, there's a lot of very important technical levels, and we're right near some of them. So on the 10-year yield, we bounced right off of 4.66%. That's a pretty important technical level. You break above that, and you're looking back at this year's highs up at around 4.8% on the 10-year yield. I'll say one thing, that what the other piece that has happened in the market, and I think a lot of people who don't look at the very short end of the curve may have missed this, is that we've basically priced out rate cuts, and that's a big impetus and something that's occurred, been occurring over time, but we did another 9-ish basis points today on the back that, like Mike said, because inflation's been going against what the Fed had hoped was going to happen, the likelihood that the Fed's going to need to cut again in order to kind of prop up the economy and prop up maybe prices that might decline too far, we're moving away from that. So as long as we wind up with a job market that still isn't, in contraction, or seeing wages not grow as swiftly as it has, I suspect that the Fed's probably on hold at this point. So then the next question is their next move going to to be a hike, and if so, when? And that's what we have to start looking out for pricing of is that, next move by the Fed, because it's not going to be probably before June at the earliest at this point.
10 years up 9 basis points to 462 right now. Are we talking like a 5% on the 10-year?
It's not out of the question. I think you'd probably have to see a reacceleration of the data. I think we've, near term, I think we've set the range, so call it 4.4% to 4.8%. This happens very frequently in the rates market, is you'll have a big move, and we had obviously a very big move the second half of last year, moving from all the way from around 3.5% all the way up to 4.8%, right? That a pretty dramatic sell-off in 10-year treasuries. But then you fall into a range for 4 months, 6 months, almost a year sometimes. But by the way, when that happens, I want to switch careers. But you fall into these ranges, and then you need really a shift in the data trends, and generally speaking, in order to break out of those ranges.
Hey, Mike, want to bring you back here. Listening to Fed Chair Jay Powell up on the Hill all day today. He did talk about inflation. He stressed that the Fed's favored inflation print is PCE, which this was not. He does say we're making progress on inflation, that this is just one print. Do economists agree with Fed Chair Jay Powell's assessment, especially when you bring into account today's CPI read?
Well, I guess it depends on the tense of the verb you use. If you say we had been making progress, economists would agree. If you say we are making progress after today's CPI report, they're going to disagree. We're going to be very interested to see what we get in PPI tomorrow, because when you look at what the PCE is comprised of, a lot of it is stuff that is imputed and comes from PPI and CPI. So economists will have a much better idea of what PCE is going to do. And if PCE stays relatively tame, as it did last month, even after the higher than expected CPI, then people will feel a little bit better about this, and maybe we get some people putting the idea of a cut back into their bets. But if it shows that the PCE is going to come in a little hot, then you're going to see people signing on to what Ira's suggesting, no cuts this year, and the Fed possibly having to raise interest rates.
Ira, I see you nodding along with Mike McKee right here. PPI tomorrow, how much of a catalyst is that when it comes to rates?
Yeah, well, it matters. It's not as big as CPI. So when you look at the market reaction and rates markets in general, the non-farm payrolls is by far the biggest mover for any kind of surprise. But CPI is number 2, and then I would say retail sales actually is third. And retail sales is obviously very important to the overall economy and for personal consumption expenditures and what the health of the overall economy is. But PPI will matter tomorrow. I agree. Interestingly, PCE usually doesn't move the market very much, and I think in part because after we get the PPI number, we know within a very small margin of error what PCE is going to be, so the market will adjust after tomorrow, and we all work on our spreadsheets and find out that number. So don't expect any big moves on PCE. I think more importantly, it's whatever statements are made by Fed officials that I think would move the market much more after they see the PCE report.
Ira, just real quickly, 20 seconds here, though. This is one data points report. I mean, we know that the markets are sensitive, and they can swing if we get another report that shows some weakness in the economy or a lower inflation print. Yes?
Yeah, that's true, except we haven't seen that. And everyone's been waiting for inflation to be tamer, and inflation's been higher than expected for the last 6 months, basically. So unless you get that lower prints, then the market's going to remain probably in doubt of whether or not the Fed's going to reach its goal anytime soon.
All right, we know you've got to run. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, thank you. We're going to stay, though, with Mike. And, Mike, one thing we wanted to ask you was something that President Trump has been calling for, and that is lower interest rates.
Oh, yeah? Can he pull it off?
I don't know.
Does the president do that, Carol? I'm asking you.
No,
okay.
Not mandate. It is the mandate of the Fed in terms of monetary policy. Is there anything in the Fed chair's testimony today that came up about pressure again from the White House?
They asked him about that tweet, and he basically said, I don't comment on what the president says. That's going to be their mantra all the way through, because there's nothing to be gained from getting into any kind of dialogue or spat with the president over interest rates. Let him say what he wants to say, and they'll just ignore it. The data at this point are supporting the Fed, so they've got the market on their side, and that is all they need.
Mike, how would you describe the line of questioning from members of the House today versus members of the Senate yesterday?
Well, it's pretty much as expected. You get a little bit different choreography, more politics. There were more people asking about tariffs and what the Fed thought of that, and about the budget deficit and various political issues. But there was still a lot on banking regulation, on the Basel III endgame, on debanking, on crypto, and things like that. So there was more focus than we've sometimes seen in past years on things that the Fed actually has something to do with, but there was the usual kind of political stuff on the side.
Hey, listen, Mike, one last question on inflation. It was a key part of President Trump's campaign to the White House to bring down inflation for U.S. individuals. Some are reporting that the administration seems to be pulling back a little bit on that, noting that it may take some more time to achieve that. You understand economics, supply-demand metrics, the pressures in terms of how prices are determined. What are the factors keeping up prices today that may be beyond the White House or really any administration from being able to influence?
Well, there are a number of them. One would be supply issues. If you can't get enough supply, when demand is strong, then prices are going to go up. And things like used cars have seen strong demand because of the hurricanes and the fires in Los Angeles, people needing to replace cars. There are some other things that are a little harder to explain. Airfares went up this past month in a way that wasn't expected, but then those tend to come back down again once they've gone up. And of course, this is not exactly the high travel time. So there are a lot of different factors that go into it, which is one reason it's very difficult for the Fed to get that last mile done, because we get into the quirky kinds of aspects of inflation as opposed to the much broader things. We get into things that higher interest rates don't necessarily solve.
All right, good stuff. Mike, thank you so much. Michael McKee, international economics and policy correspondent at Bloomberg News.
I do have some good news on the prices and inflation front.
What's that?
Jewelry and watches down 4.2% month over month.
Made with gold?
Fresh cakes, fresh cakes and cupcakes down 2.6%.
Okay.
Also, eggs up 15.2%, as I mentioned. Dental services down 0.6%. So
let's go get a cleaning, everybody.
You dive into the numbers, and there's some good news in there too.
Let's go get some dentures or something. Yeah. I don't know what to say. All right, let's stay with this. Let's get to the trade and the one crucial day of the week that delivers strong dip buying opportunities for the S&P 500. At least that seems to be what history shows us. Let's get into it. We're talking about Wednesdays. Let's bring in Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton, here in studio. Jess, great story on the Bloomberg. Why is Wednesday a day that investors should or can be relying on?
So it's actually flipped back to Wednesdays this year. So we're not that far into the new year, only into February here. But this was data that Ryan Dietrich over at Carson Investment Group put together here. And he's a well-known stock bull. And I watch him closely just because
he comes on a lot here.
He comes on a lot, and we know he's typically optimistic about stocks, but whenever it's an inflection point and he or people like, say, Ed Yardeni, another stock bull, get a little cautious in the near term, my ears are going to perk up, because typically that can be a contrarian indicator for people who follow, say, what's going on the sell side. So he was crunching the numbers, and he noticed this year, and probably not surprisingly, because there's a lot of headlines going on over the weekend, whether it's news coming out of Washington or, say, DeepSeek just a few weeks ago that obviously had big moves.
Hit us on a Monday.
AI stocks, exactly, and there was news that development over that weekend. So now you're seeing buy the dip happening midweek, whereas last year that only happened like 10% of the time on Wednesdays. It mostly happened on Mondays and Fridays. So really, it's telling you traders, at least if they're systematic traders, don't want to go long into the weekend.
Okay, Dietrich, a bull, a well-known bull,
and accurate in the last couple of years.
Absolutely, right? He got a lot of the doom and gloom, say going into 2023 when people underestimated the economy and the strength of the S&P 500. He was one of the few that got that call right.
Yardeni also a bull.
Yes.
You spoke to some bears for this story as well. What are they telling you? They're shorting.
Exactly. So specifically when it comes to particular hedge fund managers that I was speaking with, they were talking about how tricky it is right now just because of the headlines, whether it is things and developments coming on, specifically more so with tariffs and things like that, or even if you want to get into what happens with DeepSeek and the AI type trade. So a lot of them are shorting, say, the SPY, obviously tracking the S&P 500 or the Qs for the NASDAQ 100.
Kind of cool stuff. Historically, does this, I mean, this Wednesday thing, is it like something we've seen just real quickly?
So actually, JP Morgan crunched data from 1980 up until last year, and actually Wednesdays for the most part were more stronger. It was over 50% of the time you did see strength on Wednesdays. It just wasn't the case in the last couple of years, but you're seeing that again.
I mean, it's true, a lot of news kind of sometimes hits us, right?
Right.
On a Monday. I know.
I don't know. I'm just shaking my head.
You're like, let's go back to talking about eggs.
I'm just shaking my head with this stuff because, yeah, the patterns that these folks find is pretty remarkable.
Yeah, it's kind of cool stuff.
Yeah.
Interesting, right? Or at least
I found it interesting.
Makes you take a second look. We did too, which is why we wanted to talk with you. Jess Metton, Deputy Team Leader for U.S. Equities at Bloomberg News. Thank you so much. Check out her story. It's on the Bloomberg. You can also find it at Bloomberg.com.
Equities still under pressure, down 0.4% off their best levels of the day, but not at their worst levels of the day. The NASDAQ composite down 0.1%, while the Dow down about 0.6%.
I thought after that inflation print we were going to see a rout, but we shall see. We still have about just under 2 hours to go. Hey, coming up next, the possible threat of Elon Musk's Department of Government Efficiency, DOGE. We'll explain when we return on Business Week.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. CPI Wednesday. Stocks lower across the board. S&P 500, however, has pared most of a 1.1% slide as investors react to this morning's inflation data, along with comments that you heard on Bloomberg television and radio from Fed Chair Jay Powell. S&P right now down 23 to 6,045, down 0.4%. Dow Industrials down 244, down 0.5. And the Nasdaq Composite Index down 12, a drop of just under 0.1%. 10-year 4.63%, the 2-year 4.36%. Gold now down 0.1%, 28.94 the ounce. West Texas Intermediate crude down 2.6%, right now trading at 71.41 a barrel after President Trump agreed with Russian President Vladimir Putin to begin talks on ending the war in Ukraine. CVS Health higher after its fourth quarter profit beat Wall Street expectations. CVS now up by 15.8%. And this year's Super Bowl garnered over $800 million in ad sales for Fox across its broadcast and online outlets. Fox shares up by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So you know, big story from the past couple of weeks, Elon Musk's Department of Government Efficiency, DOGE, which has been making changes to the U.S. government's payment systems, causing chaos and uncertainty for organizations that rely on federal funding. Now, Musk has targeted organizations, including Lutheran charities, one of which we have talked to here on Business Week. He has suggested that they are involved in illegal activities, leading to fears that their funding will be cut off. There's a lot going on here, Tim.
Yeah, this story, it's what some say is the Doge chaos and how it threatens the safety net of many. It's reported out by Bloomberg Business Week columnist Max Chafkin. He's the host of the Elon Inc. podcast. You can find it on the Bloomberg terminal and at Bloomberg.com/Elon Inc. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He joins us here in the Bloomberg Business Week studio. Max, you dig into the Lutheran charities aspect of this. And before I read the story, I had no idea how that came on Elon Musk's radar. Walk us through it.
Yeah, well, and this is kind of typical of what's been going on. Elon Musk, over the weekend that Elon Musk got access to the Treasury payment system.
Which was basically right when Trump became president.
Yeah, I think it was about a week after Trump became president. You had all these Doge employees fan out to the government. They're all kind of finding stuff, right? And it's like some of this stuff is sort of big stuff. Some of it's small stuff. A lot of it is outrageous, at least from the perspective of Elon Musk. And during this kind of sort of flurry of activity, Mike Flynn, who was the national security advisor to President Trump briefly in like 2017, he had a whole legal back and forth or whatever. He's now kind of a right-wing activist. He tweets this spreadsheet containing the names of about a dozen charities. These are basically mostly local charities, a lot of them in the Midwest, and they're all affiliated with the Lutheran Church, or most of them are affiliated with the Lutheran Church, and says basically, this is money laundering. Someone should do something about it. Elon Musk tweets, all right, we're shutting it down. And that kind of just throws this whole part of business, of the world, into a kind of chaos, right? And I spent some time talking to some of these Lutheran charities about what it was like. And what you hear is, confusion, anger, frustration. They don't, in a lot of cases, know exactly why they're being targeted, what it's about. And when you actually look at the work they're doing, it's like a lot of it is like just basic social safety net stuff. The main kind of character in this piece runs a charity in Ohio. They operate food pantries, homeless shelters, domestic violence shelters. They rent out affordable housing, nursing homes. And you start to think about it like, this is a big part of the American social safety net. These charitable organizations that get money from the federal government. It's like how we take care of the needy in this country. And I think the point here is that, while Musk is doing all this stuff, you're seeing groups that are getting caught up in the dragnet, and there's damage being done potentially to the infrastructure of how we, I mean, in this case, how we provide health care and housing to poor people. But I think you're going to see this across the government, where there are aspects of the DOGE transformation that really speak to government efficiency, but then you have all of this kind of collateral damage. And or is it collateral damage? It's really unclear what Elon Musk thinks or what Donald Trump thinks.
I got to say, when this story, kind of hit and we were trying to understand these organizations, we actually caught up with one, Krishamara Vignaraja. She's president and CEO of Global Refuge, a recipient of funding from USAID. She shared with us what it means not to receive the funding.
We are talking about how we haven't been able to help our Afghan allies. These are individuals who had gone through every hoop in order to come, because we had made a military promise to them that they were going to risk their lives to protect U.S. troops and that we wouldn't leave them behind to face Taliban retribution. So we've been impacted in the fact that we no longer can serve them, but they can no longer even get off the military base, because the stop work order that we're talking about also affects UN agencies. So they're not even able to get off the military base to travel, even if they were able to afford their own flight to come here to the U.S. So it is paralyzing. We operate across the country. We partner with local nonprofits in the reddest of red states and the bluest of blue states. None of them receive funding because we are not able to receive funding.
Okay, again, that's Krishamara Vignaraja, president and CEO of Global Refuge. She started off with talking about how we haven't been able to help our Afghan allies, but talks a little bit about kind of almost the supply chain of groups in terms of helping others. I mean, what more are we getting about exactly where this aid and this money goes?
I mean, the thing is, we don't even know what's been cut off. And what was so interesting about getting into the story is these organizations don't know. I mean, they have not been paid in many cases, but it's not like it's been there's not like there's been a large delay or something, so they don't know if Elon Musk was just spouting off, if he just was tweeting a thing, or if what he tweeted kind of had the full force of the federal government. And it's a lot of this is kind of a microcosm of what's been happening across the government. You have Elon Musk go on Twitter and say, we fed USAID into the wood chipper last night, and on one hand, like, there is truth to that, right? Like, the Trump administration is trying to substantially cut down USAID, arguably to shut it down, but that is being challenged in court. So these employees are still getting paid. Like, they haven't actually done the thing that Elon Musk said they had done, at least not yet, because the courts have intervened. So you have a lot of this where Musk is saying something or Trump is saying something, and then the reality on the ground is maybe a little bit more muddied. And as it becomes clear, right, that could lead to some cost savings. It could also lead to pain. In the case of this Ohio charity, we're talking about 700 people. The human services industry it employs a lot of people, and including in red states and blue states and so on. And so you're going to see political pain that I think will be something that the Trump administration has to contend with. This is the kind of thing where, like, if you voted for Elon Musk and Donald Trump, I mean, no one voted for Elon Musk, but if you voted for Donald Trump to clean up the government, you may not be thinking, yeah, that would be great if they defund my local Lutheran nursing home or something like that. And so I think there's real risk here for the Trump administration and, frankly, for Elon Musk, because he's the face of this.
It sounds like, in other words, there's a risk of throwing the baby out with the bathwater here, because I think it's fair to say a lot of people do think there is, to quote President Trump, waste, fraud, and abuse when it comes to government spending. It's not hard to find examples of that.
Yeah, I mean, the issue is that our deficit is, this $2 trillion deficit, that was the goal that Elon Musk promised to cut. It seems like wishful thinking to think you're going to get there by cutting waste, fraud, and abuse. Even, he could keep himself very busy cutting waste, fraud, and abuse, and he's not going to be that far along in terms of meeting his goal. And you hear that both when you talk to critics on the right and critics on the left. People essentially on the left, they're saying there's no constitutional authority to do this. This is a crisis. You saw Elizabeth Warren giving kind of a press conference presenting this as kind of a catastrophe. And on the right, you have people saying, like, look, this is not that big a deal. The Defense Department is a big deal. Social Security is a big deal. If you talk to, like, fiscal hawks and stuff. So there is this kind of gap between reality and then the hopes and dreams. And in that gap are a bunch of programs that have constituencies. And, you think about like NIH, right? They do this big announcement essentially saying that anyone who gets an NIH grant has to have a lower amount of overhead. And when you hear Elon Musk talk about it, right, he's saying that some of these programs have 60% overhead. We're making it 15% overhead. That gap, that cutting that funding is going to mean jobs in a lot of states. And those Congress people and senators, some of them Republicans, some of them Democrats, are going to be either loudly trying to change it or quietly, in the case of Republicans, trying to adjust things.
Right, because midterms are just 2 years away. Having said that, where is Congress in all of this? And where is that argument about Congress controls, the power of the purse? That in terms of when they're spending, it's got the approval of it or the cutback of it somehow has to go through U.S. lawmakers.
Well, I mean, Republicans control Congress right now, and they are either being, sort of quietly grumbling or being super supportive. There's no Republican opposition right now. The closest thing you see toward Republicans sort of like feeling uncomfortable would be like, maybe there's a tweet or whatever. Senator Bill Cassidy tweeted about PEPFAR a couple weeks back.
This is the AIDS program.
Exactly. Saying like
in Africa that Anthony Fauci actually had a big part in it during the George W. Bush administration.
Yeah, and it's a Republican program. It's seen by many as like a pro-life program. So there's that. Katie Britt, the other day, senator from Alabama, gave an interview with her local newspaper, sort of not quite complaining about these NIH cuts, but sort of saying we're going to need to make sure we negotiate so that we don't get huge cuts to the university hospital system in Alabama that employs a ton of people.
But this is exactly what has prevented government cuts in the past. The idea that, and I'm not calling it all pork, but the idea that constituencies are affected and you have these lawmakers in Congress saying, don't touch stuff in my district.
And I do think this is where...
Look at the Defense Department and the defense contracting, for example.
Well, the defense is an interesting issue because Elon Musk is a major defense contractor. He may not be he's got obvious conflicts of interest, may be difficult. But leaving that aside, people who like this, I think what they like is that Elon Musk is an amazing marketer. Yes, good governance types on the right and the left have tried to do this stuff before, and they always fail because politics intervenes. Because cutting these programs, each of these programs, they sound ridiculous maybe on a spreadsheet, but when you really get down to it, there are people benefiting, and those people vote. Now, Musk, of course, is kind of like a transformative marketer, a transformative storyteller, and so I think the bull case would be like he is able to tell a story that causes people to go along with this. But I do think when you start reading about some of these cases of defunding or some of the stuff that's happening in the civil service, like even Elon Musk, the great electric car salesman, may not be able to sell some of these cuts to the American people.
All right, great read, and great, kind of pulling it all together in terms of the headlines that have been coming at us in terms of Doge over the last week or two. Max Chafkin, thank you so much. Bloomberg Businessweek columnist. You can catch his story. You can find it at Bloomberg.com and also on the Bloomberg Terminal. Max, by the way, co-host of the Elon Inc. podcast, where you can also find on the Bloomberg and at Bloomberg.com/Elon Inc. He is also author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power.
Hey, coming up next, one stock that is certainly on our radar, Zillow, down 9% right now. Shares lower following the company's latest business update. We check in with the CEO after this.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, I want to get to a name that is certainly on our radar. Shares of Zillow down the most in nearly 1 year. The stock off more than 9%, was down 17% at its low today. The online real estate firm delivered a revenue forecast for the first quarter that fell short of the average analyst estimate. Meantime, the company expects 2025 to be its first profitable year since 2012. Keep in mind it posted a net loss of $112 million back in 2024.
With more on the business and the U.S. housing market, with us is Zillow CEO Jeremy Waxman joining us from Seattle. Jeremy, thanks for joining us today. Likely, I would imagine, a tough day when the stock is down as much as 17%, down 9% right now. The housing market, it just hasn't recovered in the way that you want to see. What's the biggest thing holding it up?
Thanks for having me. The housing market remains challenged. It was challenged in 2024, and we're expecting it to be so again in 2025. Zillow reported great results yesterday. Q4 revenue up 17%, and we hit our goals of growing revenue double digits last year and expanding our margins. And we also guided yesterday that we expect to continue to do that again this year, with revenue growth in the low to mid-teens, more margin expansion, and positive GAAP net income for the first time in a long time. And as you said, that's against a persistently challenged housing market. So we're able to grow and gain share both in 24, and we plan to do that again in 2025, while the market remains depressed for volume and challenging for buyers.
Jeremy, do you think investors have it wrong in terms of pushing your share price down a lot in reaction to what they got on the quarter and the outlook?
We don't really focus on the day-to-day voting machine of the stock market. If you zoom out and look over the long couple quarters or couple years, we've made great progress on our integrated super app strategy. We're growing revenue nicely. We're outgrowing the category, and we can plan to continue to do that in 2025. And so over time, the stock takes care of itself. The company grows in value as we really deliver on our promise of helping more buyers and sellers get home. That's really our goal at Zillow, is to help more of our audience turn into transactions.
Yeah, and I will point out the stock was up about 28% last year and up about almost 80% in 2023. In terms of the stress, though, or maybe your, kind of cautious outlook in terms of the housing market, is it all about mortgage rates and higher mortgage rates?
Yeah, the challenge of the housing market starts with mortgage rates, but it's really about availability and supply. We are expecting flat-ish total dollar value housing market in Q1 and low to mid-single digit growth for the year. And as you said, if you look, it's not like 2024 was that much better from a volume standpoint. The real challenge is with mortgage rates staying high, affordability is a challenge for buyers, but that really locks a lot of sellers into their homes as well, right? A seller is thinking about, do they want to trade out of that mortgage? Do they feel locked into that mortgage? And many are foregoing listing their home and making that move. So you're seeing still very low inventory. Inventory is up 18% from last year, but it's still down sharply from pre-pandemic norms. And so lack of supply really makes it challenging for buyers. And then you add elevated rates and what they can afford of what there is to buy.
Jeremy, the cost of housing, certainly a theme on last year's presidential race. I'm wondering if you think that the federal government will be able to achieve bringing more supply of housing online. This came up at the vice presidential debate when J.D. Vance talked about using federal lands to build homes. Do you think the federal government will have a meaningful effect on housing supply?
The real challenge with supply, we talked about existing home inventory and what sellers are doing, but we are chronically underbuilt, right? Zillow estimates about 4.5 million homes have not been built to keep up with the demand needed since the global financial crisis. And the solution to those problems really is at the state and local level. You need things like permitting reform and removing red tape in the process to get starts done quickly. You need tax incentives and financing options so that builders can get their projects online more quickly. So the totality of the problem, nearly 5 million homes that we need to catch up on. We're not going to do that overnight, but slow and steady will definitely bring more supply to the market.
I do wonder, though, too, Jeremy, how much, though, yep, I get that, the permitting. I mean, these are problems that have plagued certainly the housing market, I feel like, forever in terms of supply. But having said that, how much, too, is there some cautiousness on the part of home builders who everybody still remembers 2008 and the overbuild? So is there also a part of that as some of the components in terms of supply?
Well, you're seeing places where it works well, right? I mean, Austin, Texas is one good example that we've highlighted where a lot of multifamily inventory in the rental market has come online, and you've actually seen rent prices come down, even with the population growth in Austin. And so, you have to remember, if you zoom out, there are still the counter forces of for sale and rentals working together. And, when folks can't get it done and find the home to buy, they end up re-renting, and you're seeing, rental inventory grow to satisfy that demand as well. So it is, as you said, it's a local issue, but there are places where it's working well, and there are places where it can work even better.
We got a hotter than expected CPI print earlier today, and my question is about how that changes the outlook for rates for the year, and then in turn how that affects your business. Does your outlook for 2025 change if rates don't come down?
No, our outlook that we put out yesterday assumes a pretty lousy housing market, and I think today's print probably just kind of confirms that fact, right? We are expecting flattish housing market in Q1 and low to mid-single digits for the year, and I think we were maybe a little bit more bearish than most heading into the year on how the housing market's going to do. Now, the good news for Zillow is we're outgrowing the category and we're gaining share. We did that in 2024, and we expect to do that again in 2025, and that's in our for sale business, where we're helping more buyers meet their agents. We're helping originate more mortgages. That's also in our rentals business. Our rentals business grew 25% in Q4, and we expect that to accelerate in Q1 as we bring more rental inventory to more renters across Zillow.
Hey, one thing I do wonder in our conversation coming off of the hot CPI print, Jeremy, is that maybe we saw certainly the rates market, the U.S. rates market, the Treasury market react and move up today. But now the talk has moved to maybe even the next move. We need to start thinking about the Fed raising rates. If we see the Fed start to raise rates, what does that do, in your view, to the housing market, and how might that impact your business?
Well, as I said, we're kind of near all-time lows on volume, right? We're down to basically folks who have to move and can get it done. And that's the thing about this market. Long-term, real estate is a growth industry. You see volumes and total value grow. Right now, you're seeing depressed volumes because of all the challenges, especially in the financial market with affordability for buyers. But folks are getting it done, and they will get it done. And what we're here at Zillow to do is help them, right? Buyers who need to buy, many of them are starting that conversation with financing rather than just dreaming, right? We now see about as many buyers start with what can I afford and can I even buy right now as they do dreaming, shopping, and going meeting an agent. And so we've brought online tools like Buyability to help them truly understand their personalized payment information. What can they actually afford for themselves given their financial information, so they can have confidence to go get a pre-approval letter, to actually go make an offer and win a house. So it is tough out there. It will remain challenging in 2025, but folks can get it done. We're there to help, and that's exactly what's driving the results you saw from us in Q4 and why we expect to continue to grow and outgrow the category in 2025.
Jeremy, you mentioned those buyability tools that you guys have on your platform. What does that show you about? Is it the first-time home buyer that continues to find it really difficult? Is it the trade-up home buyer? What does it tell you about kind of the home buyer and, in essence, the U.S. consumer out there when it comes to buying a house?
Yeah, I mean, the demand and desire to buy a home still persists and exists across all demographics. You're seeing folks having to wait longer, save up more to make that down payment, and so it gets tougher, but you see the strong desire to buy a home really persist across all demographics, and we see that in folks who are using Zillow. Again, as I said, one of the things that is interesting to us is how much more financing and total cost of ownership is front and center for a buyer before they even start. 5-10 years ago, everyone wanted to start by shopping, by touring, by virtual touring, by going to open houses. And now it's kind of a balance. As many folks want to start in that state as they want to start with just the reality of what's my budget look like? How do I set my budget and work with an agent to make sure the homes I fall in love with are the ones I can actually buy?
Hey, one thing we also learned recently from you guys is that Redfin is teaming up with Zillow for rental listings. This partnership, to me, it sort of looks like frenemies teaming up. Like you guys are competitors here. Redfin's market cap is about $2 billion. You're about $18 billion. Do you end up buying Redfin at a certain point?
We're really excited about this partnership we just announced with Redfin. It's a big step in our overall rental strategy. It's important to zoom out and remember, unlike the for sale marketplace, there's no national database for rentals. The big challenge a renter has is they can't find all the supply. They have a very short time frame to find a place to rent, and so they scour the internet, they scour offline looking. So that's Zillow's strategy. Can we organize more and more of the rental listings out there nationwide so that renters on Zillow and on our partner sites can find them. That strategy is working great. That's what's driving having the leading audience and growing audience of renters. And that's bringing more property managers to Zillow and our partner sites to want to advertise to that audience. So this partnership with Redfin to power their rentals business is just the next step in that strategy. Adding on to this great partnership we forged with Realtor.com last year, it allows advertisers to come to Zillow and get advertising in front of Zillow sites, Redfin sites, and Realtor sites to reach an even bigger set of renters. And then renters get more choice, right? They see more inventory, which again, as I started, that's the big problem in rentals is you cannot find all the inventory.
And forgive me, that Redfin market cap about $1.1 billion, so shy of $2 billion. I didn't hear a yes or a no in the answer to my question about whether or not you acquire
no plans. No plans. We're very excited about the partnership. We've worked with them on some other things before, and we love how culturally aligned they are and just digitizing the transaction in real estate.
Well, along those lines, how are real estate companies holding up through this extended housing market trough? I mean, any opportunities for you guys to do some acquisitions as a result, along maybe the lines of, I don't know, partnerships, but maybe even acquisitions?
Yeah, the bright side of a challenged real estate market is it really allows the best professionals to gain share, right? When it's rainy and cloudy outside, those that do best sometimes come out ahead. And what's great about that is that aligns so nicely with Zillow's strategy, right? Zillow's strategy is to partner with the best agents and agent teams in the industry. 80% of the agents that we partner with are in that top 20% of producers nationwide. So these are the folks that are operating businesses at scale, training great agent teams to help delight customers. So even when there's less transactions to do, and even when it's a challenging conversation with many buyers and sellers, those folks command great price, hold share, and grow their business. And so in some ways, having a choppy or a depressed housing market can advantage some of the best professionals.
Hey, we're asking every CEO we talk to these days a couple of different questions about politics, about AI. Politics is where I want to go, and just hear from you about how you view this new Trump administration in terms of changes that you've made at the company as a result, or what it means for you as a business.
One of the things Zillow focuses a lot on is AI, and AI as it comes to the real estate industry, right? Both for us as employees, but more so for our customers and our partners, our agents, our loan officers. And we've been investing in and innovating around AI for decades. And so now as generative AI comes to the forefront, we've been really advocating for responsible regulation around AI that encourages and supports innovation so that companies like Zillow can continue to innovate on behalf of the customer. So one thing we're very excited about is the continued progress on the ability to progress with AI. And, AI for us is a feature, it is a tool for our customers, for our employees, but in the real estate industry, it's really about making the professionals more efficient and effective, right? There's so much wasted work, busy work, paperwork, back office work, and when you talk to a great real estate agent or a great loan officer, that's not what they want to be doing. They want to be delighting customers. They want to be winning more business. They want to be getting more transactions done. So we're really excited about the ability to continue to lean in and innovate, not just on our tech platform generally, but on AI specifically to really bring more of this transaction into your smartphone, make it more delightful and faster for the customer.
All right, Jeremy, one last question, and it is also a question we are asking to heads of companies, CEOs, and the like. Anything that could come out of Washington and the new administration that could help or hurt your business? And just got about 30 seconds.
Zillow is really focused on ensuring that real estate stays accessible for the customer. We've outlined our principles for the consumer, which are around transparency, access, and affordability. And any policies that come, we look to help make sure they push forward and ensure that consumers have access to all the information that's out there, have access to great professionals, and have better education on how the real estate industry works. Real estate is one of the largest industries that there is, and it's the single biggest decision that most individuals are going to make. So making sure that people understand how it works, making sure that they have access to hiring the best professionals, that's one of the things we're very focused on at Zillow, and we will continue to be.
So you're hopeful that the administration, the policies will be supportive of the housing market, just quickly.
We've been around for 20 years and have been fortunate to work with both administrations. And again, as we talked about earlier, one of the real challenges in our industry is so much is done at the state and the local level to make sure that real estate can flow for the benefit of the buyer and seller.
Really good point. Jeremy, thank you for all this time. Jeremy Waxman, he's Chief Executive Officer of Zillow, joining us on this Wednesday. All right. Hey, y'all. There's a new exchange in town.
I think it's y'all.
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 It's not New Jersey, Carol. It's Texas that we're talking about.
Hey, y'all.
You all.
Y'all.
Okay, there we go.
I have Texas relatives. I have been listening to them over the years.
All right, we're talking about this because the New York Stock Exchange, yes, New York Stock Exchange plans to start an equities exchange in Texas. It's the latest firm seeking a slice of the financial services industry. With the details and what's going on, back with us is Bloomberg News finance reporter Catherine Doherty. She's here in the studio. Kat, it's the New York Stock Exchange, not the Texas Stock Exchange, but that appears to be who they're going after?
So they're going after companies that could be Texas-based, but they're also saying we welcome all. And that's the whole point. They want to be an inclusive exchange. They want to be seen as one that potentially could come with lesser, looser restrictions. When you think about New York, historically, what has happened in the last couple of years is that the listings requirements have gotten at NASDAQ and NYSE, the two largest listings exchanges. They've gotten to the point where they had diversity requirements, they had some energy, and basically all DEI efforts that companies needed to give a lot of disclosure. And because of that, it was becoming what some CEOs would say burdensome to list at these venues. And so this is a move by NYSE to say we are going to become a welcome environment. We welcome more companies to list with us. It doesn't matter the jurisdiction, but this is definitely a pivot to get more business, IPO business.
Well, that's what I was going to ask. Is it because the IPO industry, like we haven't had a ton of listings, right? I mean, is that what this is about? Like, why are they doing this?
So listings are coming back. I think that the environment is picking up.
Right.
But we've also been hearing that from the exchange CEOs for years and months now. However, so when we actually see the IPO, it's not going to be a boom. But when the IPO market starts to pick up more and more, it is a metric to watch as to where these companies list. And every time a company lists for the exchanges, that is revenue, both in the form of all of the listing services that they provide. And then also once a company is listed, that is trading revenue that hopefully if that company stays on the exchange, they can keep. So they don't want companies to defect and go to their competitor across the proverbial street. But it's a very competitive business, one that is dominated by the two mostly largest stock exchanges, but we're getting more and more are coming in.
The Texas Stock Exchange, which you write about in the piece,
the Texas Stock Exchange is coming. They're saying that they need approval, so they have filed for approval with the SEC. They expect to go online in 2026. So there's still some headway that they need to, and plans that they need to iron out, but they're on their way.
I don't get it.
Thank you for saying that.
Like I'm like, am I
an
idiot?
Is this marketing? Are they
a
just
lot of
opening
it
an
is
office
marketing, I
there?
will
Like,
say.
Let's
So
be straight
I got
here.
some questions from folks that are let's just say they're in the weeds on this industry. And what's interesting is that the data centers that actually are kind of the core infrastructure that's helping run these exchanges, some of these data centers are still going to be based in Secaucus, New Jersey, and yet they're going to be applied to and help run the infrastructure for the Texas based exchange. So it really is just a matter of how you frame it. And which kind of companies, back to like the main point of this is which companies are you attracting? Which ones are you going to court in a way and welcome and then hopefully keep their business?
I'm sorry. I'm not quite sure.
I'm going to say it, Carol. Don't mess with Texas.
Maybe I need a better night's sleep to understand. No, never mess with Texas. I have a lot of relatives. Love them. There's nothing like that state, man, and the people who come from it. Kat, great stuff. As always, Kat Doherty, Bloomberg News finance reporter. Check her out on the Bloomberg and at Bloomberg.com. For those watching on TV, the close is coming your way in just a moment. Tim and I continuing right here on Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Trump administration zeroed in today on ending the war in Ukraine. In Brussels, Defense Secretary Pete Hegseth.
As the war approaches its third anniversary, our message is clear. The bloodshed must stop, and this war must end.
President Trump was working the phones, as Stacey Lynn reports.
They were very good calls. They were very positive.
White House Press Secretary Caroline Leavitt.
The administration is wholeheartedly committed to a peace deal to end once and for all the Russia-Ukraine war.
As to who will lead in the negotiations, she says President Trump has asked
Secretary of State Rubio, the director of the CIA, John Ratcliffe, our national security advisor here at the White House, Michael Watts, and Steve Witkoff.
Stacey Lynn, CBS News, Washington.
Witkoff just returned from Russia with an American who had been detained there. Tulsi Gabbard has been confirmed as the Director of National Intelligence. Tarian Small on Capitol Hill reports many Republicans who initially questioned her experience and judgment fell in line behind her confirmation, with one notable exception.
Lisa Murkowski, Susan Collins, those are two normally on the fence Republicans who ultimately sided with the party to push Gabbard across the finish line. Notably, though, former Majority Leader Mitch McConnell is the one defector from the party who decided he just couldn't vote for Gabbard this time.
Christopher Cruz reports Elon Musk's latest target is $900 million in research funding at the Department of Education.
Musk's group says it found no need for much of the work performed by contractors for the Institute of Education Sciences. An industry group said numerous contracts were suddenly terminated this week, including some for training in diversity, equity, and inclusion. The Institute, among other things, tracks students' learning from kindergarten through high school. Advocates say the cuts will limit the government's ability to track the effectiveness of schools. Christopher Cruz, CBS News, Washington.
Millions of Americans are digging out for more snow as the latest winter storm sweeps across the Midwest.
I don't like the snow. I'm sick of it. We just had a big snowstorm that we just got over not too long ago, but my kids seem to like it, so it is what it is.
In parts of the South today, some tornado warnings. A new report out today shows inflation picked up speed last month. Kelly O'Grady of Money Watch.
The increases came from food, shelter, and energy. I mean, these are the need to have, not the nice to have. The one highlight is that rent prices are increasing slower than they were.
Still, the report is likely to delay any further interest rate cuts for the time being. On Wall Street, the Dow is lower. This is CBS News. There's a call for consumers to boycott spending.
It began online.
My fellow Americans, the 24-hour economic blackout is coming.
With a group called the People's Union urging people to speak with their wallets by refraining from spending on the last day of February unless it's an emergency or if it benefits local small business.
The economy does not belong to the rich. It belongs to us.
The group's website accuses major corporations of driving up prices, underpaying workers, and outsourcing jobs while raking in record profits. Steve Kathan, CBS News.
President Trump has repeatedly expressed interest in Greenland, a territory of Denmark. Now there's a satirical petition for Denmark to buy California. It has more than 200,000 signatures. The petition would have Denmark fork over about $1 trillion and argues Trump would be open to it because he's often at odds with the state's leaders. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. We are about 55 minutes away from the closing bell on this Wednesday. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Broker studio. We're on YouTube. We are on Bloomberg Originals and, of course, on Bloomberg Radio. We've got stocks pretty much hovering near their highs of the day, but we're really seeing overall little movement. And if I look at the S&P 500, Tim, most names in the index are lower right now.
Yeah, Charlie's going to give us some details on that in just a few minutes. In the meantime, from TSMC to Global Foundries to Intel, lots of chips news to cover. Ian King stopping by on what we need to know.
Yeah, I feel like it's such a great indicator of so much. So curious to see what he has to say. Also, the federal funding freeze. States are pushing back. We speak to the head of economic development for the state of New Jersey on what it all means for him and really his state.
And roses are red, violets are blue.
I know where you're going.
How much is this Valentine's Day going to cost you?
Oh, nice.
Yeah, I made that up myself.
Wow.
Pretty good, right? The CEO of the online flower delivery service Urban Stems stops by.
Did you write a poem for your wife, like on Valentine's Day?
I heard Charlie Pellet. I hear Charlie Pellet laughing.
Is that
Fortunately, she's likely in a meeting right now, so not watching or listening to this. But the answer is no.
Do I have her phone number? Can I text her?
Up until this year, I guess.
All right, lots to come over the next couple of hours, folks. First up, though, let's get to the laughing Charlie Pellet with a check on the trade. Hey, Charlie.
Just the whole idea of writing a poem for Valentine's Day. Anyway, here's what's going on. We have got the Dow, the S&P. They are both lower. We got NASDAQ advancing 21 points right now, up by about 0.1%. CPI Wednesday, the S&P down 13, drop there of 0.2%, and we have got the Dow down 208, down by about 0.5%. 10-year 4.62% with a 2-year 4.35%. Gold down $1 the ounce, 28.96, drop there of 0.1%, and West Texas Intermediate crude lower by 2.7%, 71.35 a barrel. Today's inflation data comes against the backdrop of tariffs and its potential impact on inflation and earnings. Anastasia Amoroso is Chief Investment Strategist at iCapital.
You know, for example, if you look at the S&P 500 margin as 12.5%, near record highs, is it possible that the companies will absorb some of the costs rather than passing it on to the consumer? Is it possible that the dollar rises and offsets some of that negative impact as well?
Anastasia Amoroso of iCapital. Chevron plans to cut its global workforce by 15 to 20% by next year as part of efforts to reduce costs at the U.S. oil major. Chevron shares down now by 1.2%. Again, recapping, S&P down 13, drop there of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Pulling up shares of Intel right now. Wow, up 6% as we speak, Carol.
I know, it's been on a run.
It has. It's on track for a third straight session of gains, risen by more than 16% over the last 3 days. Also, in other news, Intel's recently appointed head of AI is jumping ship to Nokia. It's a surprise announcement that we got on Monday after he'd been in the job for barely a year.
Yeah, also on Monday, we learned that TSMC's first quarter sales are set to be at the lower end of its forecast range after several quakes affected production in the month of January. And then don't forget, also this week, there's been so much in the semi space. We saw shares of Intel and Global Foundries rally after Vice President J.D. Vance said the Trump administration will make sure that the most sophisticated AI hardware is made in the United States. Just checking my gainers list. Yeah, I think I had Global Founders. I mean, they keep popping up.
You can still add it.
I can.
It's not too late.
We just felt like there was a lot coming at us, and we wanted to get a better feel of what's going on in the semi space.
So we got Ian King with us. He's Bloomberg News U.S. semiconductor and networking reporter. He joins us from our San Francisco bureau. I wanted to start with what happened, I believe it was in Paris, Ian, when Vice President J.D. Vance said that the Trump administration will make sure that the most sophisticated AI hardware is made in the U.S. Is that easier said than done?
Absolutely. Right now, pretty much the most sophisticated chips, as you know, are made in Taiwan, not in the U.S. That said, TSMC is building factories here, Samsung is building factories here, and obviously Intel has ambitions to get back in the game and lead that game. So what it really did, though, I think in people's minds was say, maybe there's some government action here. Maybe there are rules and regulations that can be put in place that would work to Intel's advantage and basically speed up that process which it says it's on to sort of get back in the game.
How do we distinguish this from the industrial policy of the Biden administration thus far?
Well, I think everybody is guessing right now. So any comments from Trump, from his deputies that indicate they are looking at this and are going to potentially accelerate this would be taken as a positive sign. I think there's also a sense that perhaps this administration will be taking more direct action, and that is basically considered as necessary if we're going to significantly impact the direction that we're on right now, where we think Intel maybe catches up, but maybe it doesn't. Maybe it takes years for it to do so. So I think anything that smacks of more direct action would be taken as a positive, as it is being in the market.
Yeah, we're definitely seeing that play out, Ian, in terms of shares of Intel and Global Foundries. Having said that, any money that's invested, I mean, you remind us, you know, these things, these plants, these facilities aren't just built overnight, right? It takes a while.
Yeah, no, we've said all along, this is not a money issue. I mean, money is nice and it helps and it lowers the costs, but ultimately it's about competitiveness. So it's great, you build these facilities, it takes a couple of years, but you need literally tens of billions of dollars of orders to justify doing that. And what we really need to see is customers, big customers, whether it's NVIDIA, whether it's AWS or Amazon, looking at Intel more seriously and moving in that direction, supporting its technology. That would make the biggest difference.
Concerns about a brain drain at Intel? AI chief leaving? They're looking for a CEO still?
Yeah, I mean, I think the way that at least analysts are looking at this is saying, look, you know, the guy who's leaving is one of a number of people who were brought in by the previous CEO, Pat Gelsinger. Gelsinger's not there anymore. If you're a recent implant, then maybe you look at other opportunities, thinking that perhaps you're not that embedded in the organization. So that is one way to analyze what's going on. You'll also remember that from the recent earnings call, a key AI product was called out as not being ready to go on sale, as just being basically confined to the labs, and we'll see what we can do with the next one. So that obviously doesn't reflect well on that particular unit's execution, shall we say, recently. So, you know, not surprising that we're going to see sort of mid to high level executives kind of taking their business elsewhere in this kind of power vacuum.
You know, we came off the big tech earnings, Ian, and we were looking at the CapEx spend and trying to get a feel of AI. I mean, is there anything else that you kind of got off of earnings and, again, the big cap names in terms of what it means for their purchases as they continue their AI build-out, and what it means more broadly for the semi space?
Yeah, I mean, you went to the heart of the matter. All anybody cared about, they wanted Microsoft, they wanted Amazon, they wanted Google to say, yes, we're going to keep spending tens of billions of dollars on this stuff, and it turned out that they are. So that was great news for the big names, for the central thesis. Underlying that, though, is other areas, whether it's smartphones, whether it's cars, whether it's computers. It's very much a mixed picture, and that is still a tremendous amount of volume for these companies that we're talking about. So it's by no means a rosy picture, and we'll need the economy to help out and have people go back to buying PCs. But the central thesis that the new thing is still there.
Okay, TSMC, the quakes. What do investors need to know about that type of risk? We don't often talk about, look, we do talk about natural disaster risk. I mean, Lyft even came out and said that it's been cold, so that's affected their business. We know California wildfires affect insurance companies. But what about earthquakes in TSMC?
Yeah, I mean, this has always been a factor, and this has been sort of pointed at as being one of the risks of concentration in that particular island, along with the geopolitical risk. But the bottom line is, when you're creating things that are smaller than a virus, the tolerances for your equipment are basically zero, right? You shake them, and anything that is inside that machine being worked on at that particular moment is scrap. So imagine a disk of silicon has these small squares on it, say they're NVIDIA chips. Those small squares are selling for $30,000 each. So even one of those pieces of silicon goes out the window into the scrap bin, you're talking significant losses, you're talking significant financial risk there. And this has just brought that back to us. Of course, TSMC is used to this. Of course, they're very good at mitigating it. But even so, it is still a significant risk.
Hey, one thing I want to ask you, and I always like that when we get some time to, talk about the semi-cycle. And where are we in this? You talk about, demand and then the build and then there's oversupply. Like, where are we in the cycle?
Yeah. I mean, again, this is the key question that we keep coming back to, and we should. Typically, it's been cavalry charge in, cavalry charge out. We build too much, then we can't use it. So then we have to stop making too much, and that's been the standard pattern that we've seen repeat itself years and years. This time it's different, but not necessarily in a good way, where we have large markets behaving in different ways, going in and out of the cycle at different points. And what that means is if you're an investor, you can't basically play the momentum game. You have to be much more discerning. You have to start to understand more about the industry, understand who's hot and who's not, and that's a much more complicated picture.
Carol and I want to end with NVIDIA. We've got a couple of questions about it. 17%.
All roads lead to.
I mean, 2 weeks ago, we'd be sitting here talking about the 17% slump that NVIDIA had in a single day, that week on that Monday as a result of DeepSeek. Gene Munster telling our own Carmen Reinecke that there's this underlying concern about when the party is going to end. I think DeepSeek was the wake-up call that it may come faster than people think. NVIDIA still hasn't recovered to pre-DeepSeek levels. It's down about 12%.
Yeah, neither of all of the other companies that were essentially hot on AI trades, and nor should they really. I mean, it's a case of, well, you need to explain how this technology impacts you. You need to explain how it changes what's going on and how infrastructure is going to evolve. So there are still a lot of questions, and I'm absolutely sure that this will be front of mind for everybody who listens to Jensen when they do report. But I'm also absolutely sure that he has got an answer and that we'll hear that answer. It'll just be a case of whether we believe it. So far, everything's still in place. Nobody is throwing everything out and saying, hey, we can do this on the cheap. There's still a lot of questions about what DeepSeek actually did. But when you've seen this massive inflow of cash into this relatively few companies, it's natural, right? It's natural to be concerned.
All right. This is why we love when we can do these deep dives with you and just pulling together all of the headlines that are coming at everybody from the semi-space. You rock. Ian King. He is Bloomberg News U.S. semiconductor and networking reporter joining us out there from the West Coast. Should point out the stocks, by the way, is down about 7% from late January. Just telling you. Just thought I'd share.
NVIDIA, not up much for the year.
Just wait till the end of February.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The Dow and the S&P are lower. NASDAQ is higher. Stocks whipsawed with the S&P 500 pairing most of a 1.1% slide. Right now, the S&P is down 0.2%, lower by 14 points. The Dow down 251, down 0.6%. NASDAQ up 26. The composite index is advancing by 0.1%. The 10-year at 4.63%, with a 2-year 4.36%. Spot gold up $1.82 the ounce. Little change, but below 2,900. 28.99 right now, up 0.1%. And West Texas Intermediate crude 71.34 a barrel, down 2.7%. Underlying inflation last month rose by the most since March, diminishing chances that the Fed will lower rates anytime soon. Now, what about the chances of a further market decline? What potentially could be a catalyst? Brooke May is managing partner at Evans May Wealth.
Well, it's shocking that we haven't seen the pullback yet with the headlines. Earnings could be a concern. As NVIDIA goes, so goes the market. And so if we were to see poor earnings out of some of the big tech companies, we think that that could be a catalyst for a correction. In addition to, inflation data points, if they continue to come in high, that also could lead to a correction.
Brooke May of Evans May Wealth. Now, she mentioned NVIDIA. It'll report February 26, 2 weeks from today. NVIDIA shares right now down by 1%. After the bell, we'll be hearing from Cisco Systems. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, the Trump administration is not complying with a judge's order to unfreeze $3 trillion in federal funds. This is according to California AG Rob Bonta saying on Friday, citing a number of projects that continue to be locked out of federal funds. A coalition of Democratic-led states, including California, filed a motion in Rhode Island federal court on Friday to enforce the temporary restraining order. For more on this, we turn to Eric Larson, Bloomberg News U.S. legal reporter. He joins us here in the Bloomberg Interactive Brokers studio. I want to start with context.
Sure.
How much federal funding do states get?
They have said in their complaint that it's tens of billions of dollars, potentially more. Of course, the freeze that we're talking about here that the Office of Management and Budget put in place with that surprise memo accounted for about $3 trillion in funding altogether when you count the nonprofits and all these other organizations that rely on that money. But this suit specifically is filed by states that have tens of billions of dollars at stake, although they did succeed in putting that freeze on hold nationwide across the board for everything.
So they're not getting money, or?
Well, that's the thing, is that the temporary restraining order that the judge granted was supposed to unfreeze all that money.
Right.
And the issue is that the states came forward and said, actually, a week after this TRO was put in place, we are still having trouble getting all of the money that we're supposed to be getting from the federal government, including under big programs like the Inflation Reduction Act and things like that. So they presented evidence to the court, and the judge, this federal judge in Rhode Island, agreed and issued an order saying that the Trump administration had violated the temporary restraining order and ordered them to get back into compliance, and that's where we are now.
And are they back in compliance?
Well, that I think remains to be seen. We haven't seen any further filings from the states saying otherwise, but they have had problems following through with the court order clearly across the board, across the country in a lot of different ways that were outlined by the states. So we'll see.
What kind of things, what states and what kind of programs are we talking about? We're going to be actually speaking with Tim Sullivan of the New Jersey Economic Development Authority in just a moment. Give us an idea of who's impacted.
Sure.
Or potentially impacted.
All of the states were saying that they were being impacted in it. And you mentioned California, New York. Attorney General Letitia James is also a leader in this lawsuit. They said that some of the funding that has been continued to be withheld related to a lot of environmental programs, millions of dollars that go to states to, for example, help monitor air quality and things like that, even maintaining roads. So the big Inflation Reduction Act covered so many different areas of the economy that there was lots of grants of different kinds going to the states.
So this was congressionally approved, as we know, money.
Right.
Funds.
That's a big problem here with the freeze. The states alleged this money was already approved by Congress, and now you're freezing it.
One last question. So what are we waiting for now? do we know from states that they're not getting anything still?
We're gonna find out what they say next. I mean, the judge could not have been more clear. He threatened criminal contempt of court if there wasn't compliance. But next, the states are going to see a much longer lasting preliminary injunction against the freeze that would put that freeze on hold for the entire case.
Eric Larson, Bloomberg News U.S. legal reporter, joining us here in the Bloomberg Interactive Brokers studio. Well, for a look more closely at how that spending freeze could affect states, we welcome Tim Sullivan, CEO of the New Jersey Economic Development Authority, also known as the NJEDA. It's a state agency responsible for economic growth and development in New Jersey. Tim joins us from New Jersey. Tim, good to have you back with us. New Jersey is a state that is part of this coalition. NorthJersey.com reporting that Governor Phil Murphy says this freeze could cost New Jersey up to $27.5 billion. Is the money flowing now?
Yeah, so the governor, I think, correctly highlighted what a big potential deal this is for Jersey and lots of other states. Obviously, this is subject of ongoing litigation that our Attorney General, Matt Placken, is leading, and certainly would have a huge impact. I think that's why you've seen the governor and the Attorney General standing up and saying this can't happen.
Yeah, I mean, we want to move on to some other things, but I mean, what kind of an impact, this is some serious spending, would it mean for the state of New Jersey in terms of its economy?
Yeah, again, when you start talking about tens of billions, $20 to $30 billion, that's a huge impact. New Jersey's a big state with a $600 or so billion GDP. We're a big state, but that's a lot of money, and a lot of people rely on it, both for economic development purposes that me and my colleagues care a lot about, but throughout the state, whether that's education or human services or any number of things, it could have a huge potential impact.
Tim, are you and the team and the governor already thinking about, okay, in case this does go away, we've got to start thinking about different ways that are going to drive growth within the New Jersey economy? Full disclosure, my home economy.
Yeah, it's thinking about how we grow the economy is something we do all the time, no matter what's going on in Washington, no matter what's going on, with federal policy changes, and so. Certainly if there was a dramatic shift in federal policy on any number of funding streams, there'd have to be a course correction. And that's well above my pay grade. But, in terms of things that we're trying to do to grow the economy, we're going to continue to focus on the things that Governor Murphy's been focused on for 7+ years now, which is, growing new industries, supporting small business, supporting innovation, trying to grow, more new young companies that grow and scale and add, tens of thousands of jobs.
Can you tell us where the federal funding goes versus where state funding goes? Like, where would this money, if it were frozen, where would people in New Jersey feel that?
Well, this is a bit outside my lane, so I don't want to hesitate to comment too broadly. Obviously, the governor put out sort of a report on our federal funding either earlier this week or late last week. It's pretty broad and deep. I can tell you with regard to economic development, we have significant programs that are funded around environmental remediation. We have programs that are funded around supported around small business. The big slug of funding that came from the American Rescue Plan supports small business funding, and so the ramifications could be really, really significant.
Hey, let's go to congestion pricing because we haven't had a chance to catch up with you since this has been implemented.
I paid my first congestion pricing this week.
How quickly did you get into the city yesterday, Carol?
I got fairly quickly, but I don't know. It was pretty early in the morning, so typically I don't see a lot of traffic.
Well,
but I don't know.
I think we spoke to Bill Maloney yesterday, who said even early in the morning he's getting in.
Huge difference.
Yeah, huge difference.
Huge difference
Tim,
on New Jersey.
Yeah, what does it mean for New Jersey? What does it mean for you?
Yeah, so this is something again, the governor's been pretty clear on, and this is also subject to some ongoing litigation. So I got to be mindful of how I comment here. But the congestion pricing, the governor's not opposed to it in any form. It just doesn't think the way it's been approached here is the right way to do it because we don't have a complete data set based on anything I've seen of whether folks have switched how they're getting into the city or what roads they're taking or whether they're rerouting, and trucks and cars have different options with regard to mode shifts, and so whether that means pollution in Hudson and Bergen counties, whether that means different impacts on our traffic on our side of the river. I don't think there's been enough data yet to reach too many conclusions. But the governor's been clear that the current framework doesn't work for Jersey, and that's where we stand on it.
Well, and I guess what we're really more interested in terms of your view, Tim. Like, what do you do to say, all right, folks, you don't want to pay the congestion tax? Come on and set up shop here in New Jersey.
Yeah, exactly. We've got some ads running both on I think taxi toppers and a few billboards through the city and digital, making that exact point of even if commutes get a little better, it's still a slog in and out of the city every day, particularly if you're driving. And why not avoid that and avoid that and come to Jersey and set up shop?
Is it working?
We've got a number of incentives programs. One of which that is being highlighted by those ads is called Rise, which basically is for folks who are remote working. If you classify them as Jersey employees, we'll give you an incentive to do so, and the state benefits from a tax perspective, state of New Jersey. And so that's one of the programs we're pushing on that front.
I know it's only been a little over a month since congestion pricing went into effect, but is that ad campaign working? Do you have any data you can point us to?
It's early days for obviously congestion pricing and for that campaign. We've seen an uptick in interest in the program that we're marketing for sure. And I think folks are, evaluating the implications of what congestion pricing means for their workforce, both, big businesses and small businesses. And the message we want to send is Jersey's open for business, and we're eager to help more businesses locate here.
Hey, one of the things I'm always curious about, Tim, and we just talked about this a lot coming off of the Super Bowl and just the building of stadiums around the nation and what that means for a local economy. And often, you tap the muni market to pay for some of this or a lot of it. Something like the Prudential Center or MetLife Stadium, like these kinds of facilities, what does it do? What kind of economic might does it give to the New Jersey economy?
They're incredibly important. I mean, sports and entertainment, broadly speaking, are incredibly important economic drivers, not just for Jersey, but all around the country.
Is it the top, one of the top drivers of economic growth?
It's certainly one of the big ones. New Jersey is blessed with lots of drivers of our economic growth, including things like the pharma industry and the booming film and television sector that's taking root in Jersey. So we've got a lot of contributors to the growth story. But when you look at things on the forward radar, things like the World Cup in 2026, Jersey will host the final, and I think 8 games. The projected economic impact from that alone ranges from $2 to $3 billion.
You've worked,
and so that's,
That's Sorry, go ahead.
Extraordinary, and we've got the Club World Cup coming up as sort of a dry run for that this coming summer. Then when you think about the Prudential Center and all that, not only the Devils and Seton Hall plays basketball there, but you've got some of the best concert offerings anywhere in the world come through the Rock, and that's one of the top performing concert venues anywhere in America. And so it's a huge driver for Newark, and it means it's great when there's hot concerts in town or whatever, but it means a lot for small businesses in Newark that restaurants and pubs and bars and everything else that supports activities like that.
How much of an economic driver is Bruce Springsteen?
It's hard to put a value on the boss. I'm a huge fan, so you're tempting me to sort of geek out on various things I might say about the boss. But he's critical to our economy. He's a state treasure.
All right, what about
we have Bruce Springsteen Day officially in law in September.
Of course we do. What about the Housewives of New Jersey? I'm only kidding. I'm not going to ask for the economic impact of that. Tim, so glad we got some time with you. Tim Sullivan, he's Chief Executive Officer of New Jersey Economic Development Authority, joining us from the great Garden State, my home state. I'm a Jersey girl.
Full disclosure,
I'm a Jersey girl.
You're
love
biased.
It. No, I'm not. I speak the truth. I'm a journalist. I can make, the distinction. It's incredible. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average moving lower right now. 20 minutes to go ahead of the close. S&P also down. NASDAQ is higher. But for all the details, we head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed after a weak opening post the hot CPI data. Dow's currently down 255 points, was down 489. S&Ps are lower by 17, but the NASDAQ is higher by 14. The U.S. 10-year yield spiked to 4.63%. Gold is little change. Oil is in the red, and Bitcoin, that's higher by 2.4%. Among the main 11 S&P sectors, leaders were consumer discretionary and telecom. Energy was under pressure, and leaders to the upside of the Dow, Boeing and Apple, while Home Depot fell 2.7% and led to the downside. After earnings, CVS jumped 16%, Genrock rose 9%, and in deal news, Honda and Nissan may end their merger talks. Wrapping things up, some of the names pointing up to the bell tonight include Cisco and Robinhood. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18, 19 minutes to go until we wrap up the trade on this Wednesday, February 12th. Carol Masser, Tim Stanovic, live in our Bloomberg Interactive Broker studio. You heard Charlie breaking down the trade here. It's been relatively quiet on the equity front. What's been interesting, certainly today, coming off that hot, quote-unquote, hot inflation print has been the move up that we've seen along the U.S. Treasury curve. Right now, that 10-year note with a yield of 4.63, 2-year note shorter end 4.35. So interesting there. Let's see what Leo Kelly has to say. He's founder and CEO at Verdance Capital Advisors, joining us once again from Hunt Valley, Maryland. Leo, how are you?
I'm well, Carol. How are you?
Hanging in there. A lot coming at us, a lot coming at investors. You know, one of the things I keep wondering is, for those who manage money for clients, do you kind of sit tight and wait for the dust to settle? Or if you've got, are you putting money actively to work?
Well, you always have money at work, first of all. I think there's this concept of money goes in or goes out because of any specific moment. Now, you do underweight and overweight based on valuation, based on macroeconomic expectations, et cetera. And so where we are at the moment, we're slightly overweight equity, but we are underweighting these, what I would consider highly valued growth names, and we're definitely underweight fixed income. And so holding more cash, really a lot of dry powder on the sidelines, ready to put to work. I do think a fair amount of volatility is inevitable here coming up in the next several months.
What's it going to take for you to use that dry powder? Like, how much do you need to see stocks fall in order to say, okay, now is the moment to pounce?
Well, first of all, because that dry powder is coming from the fixed income markets, we could be more patient with it. We're fully invested in equity.
But does the dry powder go to fixed? Does it go to fixed income?
It could go to equity. If we get a pullback in equity, right, then naturally the allocations start to come down and we'll put money to work. I think if we take a step back and we look at where we are, you know this, we've said this over and over again on your show, people become overly optimistic about inflation coming down. We think this inflation story is a long story, and we've got a long way to go. So we're not really excited about the fixed income markets right now. We are starting to see some extraordinarily elevated valuations in the big tech names, the AI. I've said this before, it can go anywhere, but it sure is starting to feel like 2000. And what I think people have to remember is in 2000, 2001, the NASDAQ was falling precipitously, but the rest of the market actually you could make money in. And so we have broadened out our exposure. We put a lot of money to work internationally at the end of last year. That's worked out so far this year. So there's plenty of places to put money to work where valuations are much better than these hot stock market names.
You know, it's interesting. A couple of things. First of all, I feel like when we, kind of look for gainers and decliners every day, it's interesting to see it's not just your Mag 7. I mean, CVS, you've got Gilead, and some others. It's just interesting. You do see a broadening out. The thing, though, I want to seize upon is you putting money to work overseas. We had a lot of people, I feel like, at the end of last year saying, Europe, 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 look overseas, other opportunities. And you've actually seen, if you look at some of the European markets, a pretty strong start to the year, and perhaps better than even what we're seeing here in the U.S. market. Where are you putting money to work overseas?
Yeah, we are in Europe. Japan looks interesting as well, but Europe looks really interesting to us. I think it's really just a valuation play, right? Those companies are going to experience the same uplift from AI productivity, from the U.S. economy gaining strength, et cetera. But we're talking about, we started to touch around a 3 standard deviation valuation spread between the U.S. S&P 500 and the European main markets, driven by this massive valuation and the top handful of names in the S&P 500. When you start to get gaps that wide, historically, that works out very well if you're a long-term investor, if you put the money to work and let that play out.
Hey, what in terms of, Leo, what's coming from Washington? I mean, it's been an interesting couple of weeks in terms of what's going on out of Washington. And, we watch because the markets react, certainly off of, tariff, expectations of tariff, even talk of tariffs, or talk of tariffs, but delay in tariffs. What in terms of policies do you think ultimately become a reality and that will have to be what investors take into account and trade off of?
Yeah, the tariff conversation is actually a pretty interesting conversation because what we're hearing now is that the putting tariffs in is going to add to inflation. We have continue to be under the opinion that we continue to try to look for solutions to inflation from through areas that don't affect inflation, at least not in this market, right? Moving interest rates around really isn't the solution. Lowering energy prices, which is what Trump's saying is going to happen, isn't really going to be the solution. The supply of money is just dramatically too large. M2 grew at a stunning rate of 40% over a couple of years. And if you look at the correlation between inflation and money supply, you'll see a pretty accurate correlation. As inflation dropped last year, money supply had dropped. It was going down by 5%. And now we're starting to see inflation get hot. Well, guess what? M2 is up about 5%. So I think you have to separate the noise of the tariffs with the true impact. Now, in terms of the tariffs themselves, anybody who's followed Donald Trump for more than a day knows that he's a negotiator. And so his goal many times is to move the goalpost, right? If you're negotiating in the middle, well, then the way to get the middle move is move both goalposts. And these tariffs are, in many cases, his way to create a new negotiated middle. It's been effective so far. It was with Mexico and Canada. We'll see if this continues. And so I do think right now we're in that early stage of him trying to punch the goalpost into another direction. So I think we have to be patient and see what actual tariffs hit versus what are just negotiation tactics. I think it's still too early to make any dramatic assumptions, but we are keeping our eye on it. As a matter of fact, one of our analysts is specifically looking at each tariff threat, and then as they come to fruition, what it means to our portfolios.
Hey, Leo, we only have about a minute left here, but we were watching Elon Musk in the Oval Office yesterday talking about Doge. Do you anticipate any impact from any success that he has cutting government spending at Doge?
I think he has the opportunity to. I think if you think about this is common sense. It's what everybody's wanted for a long time. It doesn't matter if you're a Democrat or a Republican. I think if we take a step back, cutting unnecessary spending makes a lot of sense. I do think they need more structure. I do think that they have to come up with a more, let's call it stable structural way to go about this. And I do think they will do that. So I am hopeful that they are going to cut spending. Going back to that inflation issue, right? The supply of money is impacted both by the Fed and by federal spending. So reducing federal spending and getting the Fed to calm down a little bit with money supply growth might actually be the solution to inflation, not just cutting a short-term rate by 50 basis points.
As always, a great take on our environment. Leo, thank you so much. Leo Kelly, he is founder and chief executive officer of Verdens Capital Advisors. Folks, we've got the close coming your way in just about 10 minutes. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Carol Massar. I'm Tim Stenovec on this February 12th.
Sorry, I'm doing a little...
It's the Valentine's Day
Eve,
Carol.
It's what?
Valentine's Day Eve.
Yeah.
Yeah.
It's also Fridays.
Eve. All right.
That's where Sarah
you can't
Lindsay,
really
our
get
producer.
to the,
What?
Like counting down Friday on a, Wednesday.
You know what? You can start counting down on Friday whenever you want. Hey, listen, in just a few minutes, we're going to, as Tim mentioned, head over to our TV colleagues, count you down to the close on this Wednesday. We also have some earnings coming your way, including Cisco. That's a big one. We'll see what they're hearing from customers in terms of spending. Their outlook will be really important. Robinhood will get a read on trading. This one's been up almost 50%, 50% this year, so that's a big deal.
A read on coffee from Dutch Brothers. MGM Resorts, a read on gaming.
Dutch Brothers.
Yeah. Not big in New Jersey, I don't think.
Huh.
I think it's more of a West Coast thing. It's drive-through coffee.
Oh, I don't know them, but almost a $10 billion company.
Yeah, they went public during the pandemic. It was like a huge IPO. They do franchise drive-through shops. They focused on coffee, hot and cold espresso, cold brew. They do energy drinks, tea, lemonade, smoothies.
It's up 23% year to date.
Wow, that's just, and
Do
it's
you
only
use them-
February.
do you have them in California?
I've never been to one.
Well, we're kind of lame, right? Like,
Yeah, we are.
Where do you want to go?
I guess I want to go to a Dutch Brothers because I've never been to one and just give it a shot.
Yeah.
I've never even seen one.
I know, that's why I
In
was
the
like,
wild.
oh, I don't
Yeah.
know about that.
Tell us, get in touch with us. Tell us if you love it.
Here's a great story. Can I just say, among our most read stories on the Bloomberg, it's about the former intern that becomes a billionaire in Australia via a pharmacy merger. So a corporate tie-up in Australia will produce a parade of fortunes in an industry hardly known for extravagance. More than 100 shareholders will officially be millionaires. At least 10 will be worth over $100 million. And atop the group are 3 billionaires, including, drum roll please, can you hear that?
I don't even know what you're talking
One
about.
former intern. Wait.
Oh, I see it.
You see it?
Yeah, I see it.
Go to Most Read.
Yeah. Wait.
This is a tutorial on how to use the Bloomberg terminal.
Well, it's actually how to read Carol Master's mind.
That's true, which is, God bless.
I know how to
if
use,
that happens to you, go straight to the emergency room.
I know how to use the terminal, okay?
Do not walk.
I just don't know where you're going.
Run, Forrest,
with
run. Yeah, but it's just kind of interesting, right?
That's pretty
remember
cool.
Remember we used to talk about for years about the Coke millionaires, all those
Yeah.
people who owned shares of Coke and just held on to them, and they just, because they went up so much.
What about the Microsoft and Meta platforms?
Yeah, those people
millionaires?
who've sold and bought an island in the South Pacific.
Or just people who worked there for a few years and then left before it went public.
Yeah.
And, they don't have to work
So I
again.
say to college graduates, find a company, a startup, and go work with them. And
Easier to do if you have,
from the ground up.
if you can see the future or have a time machine and can go backwards. I think harder to do at the time.
Don't you have one of those?
Yeah, maybe.
So you gave up on my story, huh?
I did, yeah.
All
I
right.
did. I'm looking at what else
Apparently
is
he
among
doesn't
the
want to
most
look into
read
Masters'
on the
mind.
Bloomberg terminal. Elizabeth getting us, sending this one to us about Chevron, planning to lay off about 15 to 20% of its global workers. It's part of an effort to reduce costs and raise profits.
Yeah, I think we're going to be watching this. I thought it was interesting. I was hearing some promos about Ford, in particular, concerned about some of the tariffs and that what kind of layoffs they might need to do if they go through. I mean, I think this is where companies are. They're waiting to see what policies come down and what it means for their business.
Well, I also want to know the impact of AI and how companies are thinking about, okay, if we can get our employees more efficient, what does attrition look like? Do we do layoffs as a result? Do we just not rehire for roles if people leave or retire because employees have gotten more efficient because of AI, or we've been able to do things? We talk about it, when we talk to folks about, when we talk to analysts about AI, Carol, they often talk about it in the manufacturing process.
Right, exactly. I think, folks are waiting and seeing a little bit. I think there's still some sensitivity coming off of the pandemic about letting go of workers, and then it was so hard to find workers or, in general because of demand.
Labor hoarding.
It's a different demand, maybe supply picture, but nonetheless, we'll have to wait and see. If companies feel some pressure, they cut costs, and that often includes workers. All right, everybody, we've just got a few minutes left in today's trading session. Do not go anywhere. Tim and I heading over to our TV colleagues. That's because the closing bell, it starts right now.
Starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside of fidgety Alex Steele, here to help take you through the closing bell, a global simulcast. It starts right now. Scarlet
Because
Fu.
she's not used to you being there.
Scarlet Fu in the TV studio.
I
have a whole script here that I'm supposed to read, Carol Master. They deduct, points away from me if I don't read the whole thing. That's Carol Master, by the way, who introduced herself. Hey, Tim Stenovic. Nice to see you as well.
Good to see you. Welcome back.
As we welcome our audience across all of our Bloomberg platforms. We got lots to do. Let's get right to it. A lot of earnings coming after the bell, but a lot of action. Well, in the cash session today.
Yeah, kind of mellow, I feel like, in the equity trade. It's really been about the U.S. Treasury trade. Having said that, I am looking at the home builders down almost 2% here. That robust inflation print, CPI print, kind of diminishing the odds of a U.S. central bank rate cut. And, you think about how that plays into the mortgage market. So we see some pressure on that area.
Well, what happened to the pressure that we saw earlier in the session as a result of that hotter than expected CPI print? The NASDAQ 100 was down as much as 1.1%. Right now, it's higher. Did everybody, not get concerned about the price of?
Tim, that was 7.5 hours ago, Tim. What do you expect?
How resilient the equity market has
be nice
become.
to my co-host.
But to that point, Scarlett, you know, a couple weeks ago we saw retail coming in, mom and pop buying the dip. Then we heard from Goldman Sachs that hedge funds were coming in and buying the dip. This just continues the theme that we've seen over the last couple weeks.
And it is a Wednesday. Remember, there's a story about how Wednesdays tend to be a little bit stronger for U.S. equities.
All right, we get the closing bells here in New York. A mixed bag, we'll call it here, though red across the screen for most of the major indices. But we should point out, where stocks open was a lot lower than where they're going to close today. The Dow Jones Industrial Average down more than 200 points, but that's only a drop of about 0.5%. The S&P 500 looks like it's going to close lower by roughly 0.25 percentage point right now at that 6,051 level. And we should point out the S&P tested that 6,000 level earlier in the session, and it bounced off it hard. A signal here that there are a lot of dip buyers looking for entry points. The NASDAQ composite is going to finish out the day in the green by only by a fraction of a percent. The NASDAQ 100 up about 0.1%, and the Russell 2000, that's your laggard, lower on the day by 20 points or 0.9%.
Yeah, with those little moves, it's always important to dig into the index, which is what we do right now. You've got about 344 names lower in the S&P 500, Scarlett, 158 to the upside.
All right, let's take a look at the IMAP. A lot of red on that screen. In fact, only 2 sectors finishing in the green, and that's even barely. Consumer staples up about 0.25%. Communications services basically unchanged. The big losers of the day are energy stocks. Alex mentioned it earlier, 2.7% lower, with all 22 members in the red. Real estate investment trust and materials also down about 0.7% and 0.9%.
All right, guys, let's get to some of the individual gainers here. And you've got CVS, your number one gainer in the S&P 500, up about 15% here. Company reported adjusted profits for the fourth quarter that topped expectations. Also reported medical costs in health insurance unit that was better than the average analyst estimate. We had analysts viewing the overall results as better than feared, and Baird actually calling it a solid first step in the right direction. Do we want to do those earnings?
Yeah, let's just get squeeze in some earnings here.
Good.
Trade desk, their shares moving lower here in the after hours trade, down about almost 19% here. This is an advertising platform. Adjusted EPS did beat in the most recent quarter at 59 cents a share. Street was looking for 54 cents. Revenue, though, was light, 741 million. Street was looking for roughly about 760 million. The company also gave a forecast for first quarter revenue that appeared to come in a little bit light, 575 million. The Street on average looking for 581 and change. And just real quickly, we should point out their EBITDA forecast for the first quarter, adjusted EBITDA, 145 million. Street was looking for 192 million. So that's a big part of the reason you're seeing the shares down 21%.
Yeah, wow, that's a big hit to the downside. Waiting for some more earnings. I'm going to go back to another gainer. Gilead Science is up 7.5%, a top gainer on both the S&P 500 and NASDAQ 100. The company coming out a big fourth quarter beat, gave 2025 guidance that beat analyst estimates, and it also highlighted continued demand for its top-selling HIV medicine. So really another big mover to the upside. And here's something, not an everyday name, Upstart Holdings. It is an $8 billion market cap. AI lending marketplace reported stronger than expected fourth quarter results, provided an upbeat outlook. Stock shot up 32% in
What is this,
session.
2021?
I should put
This was a meme stock.
It's up 44% year to date, 22%. Speaking of a meme stock, 22% of the float is shorted. So nonetheless, you had a bunch of analysts raising their price targets on it. So there you go.
Meta? You didn't do Meta, Carol?
I did not do Meta.
Okay, 18 days.
Do not
of gains.
judge me.
18 days of gains for Meta.
Let's just wait for the 19th day. Do it tomorrow.
Thank you, Scarlett.
NVIDIA shares today falling by 1.25%. I did want to look at shares of NVIDIA because just over 2 weeks ago, we were talking about that DeepSeek news where NVIDIA fell 17% in a single day. It's still down more than 11% from that January record. Shares fell today after that underlying U.S. inflation report last month rose by the most since March. Lyft shares having a tough day, post earnings down 8%. First quarter gross bookings outlook came in below Wall Street expectations. Due to cold weather, it hurt demand not just for rides, but also for those bike rentals. The company did also announce its first share buyback, pledging to purchase up to $500 million. Stock did fall today by 7.8%. And finally, Zillow shares plunged more than 9% today. The company gave a revenue forecast for the first quarter that fell short of the average analyst estimate. The company does expect to generate positive net income on a GAAP basis this year. It's its first profitable year, going all the way back to 2012. At least 3 banks raised their price targets. We did speak to the company's CEO, Jeremy Waxman, earlier. He told us he's still very cautious on housing. Even if rates don't go down this year, it won't affect the company's outlook for the year. They also announced this Redfin partnership. I asked, Are you going to buy Redfin? I mean, it's like a $1.1 billion company. Zillow's like $18, $19 billion in market cap. He said no plans to do it as of right now.
All right, just taking a look at the bond market here, because that's honestly, guys, where a lot of the action was and stayed. The belly of the curve seeing that sell-off. That's where we saw the most dramatic moves. We also had the 10-year auction that came at 1 p.m. It really wasn't that great. The bid-to-cover ratio was below that one-year average, the lowest in about 4 months. Really needed those higher yields to kick in to get demand. So now we sit at 4.62, you guys. We see the velocity of the move. At some point, does that then have a trickle-down effect when it comes to the equity market?
It's kind of interesting, too. We talk about the equity market reaction to that CPI report, and obviously the market did sort of recoup a lot of the losses, but then you look at what still finished down. Financials got hit. A lot of real estate unreached got hit as well. Carol.
All right, let's get to Cisco. Let's go right to the fiscal year revenue. Everybody wanted to know about the outlook for this company. So fiscal year revenue, Cisco sees it at 56 to 56.5 billion. That is above what the street was expecting. They were looking for 55.3 to 56.3 billion. Seeing Cisco just up about 1%. It's boosting its quarterly dividend to 41 cents a share, which is what everybody was expecting. And here's a big deal. It boosts its buyback authorization by $15 billion. Investors tend to like that. It's up about 2% here in the aftermarket.
All right. Well, I'm looking at shares of Robinhood in the after hours right now. The company did report earnings just now. Shares of Robinhood higher by 8% as we speak. Fourth quarter crypto revenue coming in above estimates at $358 million. Fourth quarter net revenue beating estimates, coming in at $1.01 billion. Fourth quarter EPS coming in at $1.01. Fourth quarter net deposits coming in above estimates at $16.1 billion. Also, their assets under custody in the fourth quarter beating estimates at $193 billion. Shares higher right now by 9%.
All right, let's also get you MGM Resorts. That company reporting fourth quarter adjusted EPS of 45 cents, more than double, or I should say almost double what analysts had been anticipating, which was a 27-cent EPS. Fourth quarter net revenue, $4.35 billion, also higher than anticipated. And when you look beneath the numbers, you look at Las Vegas Strip Resorts net revenue, that was down about 6% year over year, slightly missing estimates. And MGM China net revenue up about 3.7%, slightly higher than what was anticipated.
I'm taking a look at Dutch Bros, guys. That stock is soaring in post-market. It beat for the fourth quarter on earnings as well as revenue. And then they also see their total full year 2025 revenue on the high end. That's also a beat. And their adjusted EBITDA earnings also a beat as well. That stock up significantly post-market.
Yeah, absolutely. I do want to go back to Robinhood here as we watch the shares tick higher here in the after-hours session. And we talk about the reliance on crypto revenue in that most recent quarter, about a third of its revenue growth. And the big question is, can you actually continue that pace going forward? Is that going to represent a third of their revenue for the first quarter, the second quarter, the third quarter on, or should we expect sort of a little bit of a receding in that contribution?
Hey, I want to go back to Cisco because it's up about 6% in the aftermarket. We mentioned that forecast for revenue, which is above what Street was expecting, driven by companies' increased spending on computing infrastructure for AI technology. This was a big question. They wanted to see, whether or not that spend is continuing to happen, and it looks like it does. We mentioned the company raising its fiscal 2025 target to over $56 billion, citing strong product orders and revenue growth, with sales rising 9% to $14 billion in the fiscal second quarter. So again, we've got Cisco shares up about 4.5% here, Romaine.
Reddit actually now reporting earnings as just crossing the wire. Those fourth quarter numbers looking good on the surface. 154.3 million in adjusted EBITDA, well above what the street was looking for of 128.7 ARPU in the quarter, 4.21. The street was looking for 3.91. Here's your guidance, though. The company saying first quarter revenue will be in the range of 360 to 370 million. The low end of that range is above the average of street estimates here. The company also saying that it expects to see some continued strength on EBITDA as well, 80 to 90 million. That's the EBITDA forecast is giving for the first quarter. The street was looking on average for 72.3, though you see the shares significantly lower here in the after-hours trade, down 12%. We're going to dive a little bit deeper in to see why the market reaction is what it is.
All right, perhaps a decliner for Tim tomorrow, and I know a gainer for me. Dutch Brothers still up about 25% in the aftermarket. Dutch Bros. Oh, sorry.
Yeah, sorry.
Is that how you say it?
Is it? I've never
Have you guys been?
We've just said we've never been.
I think we're in the wrong region.
Yeah, that's what I was saying.
Dutch Bros. All right, I stand corrected. All right. That's
all right, bro.
All right. We'll see you guys tomorrow. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. The Reddit numbers.
Yeah.
A little bit of a surprise to me that came out at that time, but...
What do you mean?
Yeah, just, thought they'd be a little earlier. I was waiting for Reddit.
Oh.
Yeah.
Why?
I don't know. I just thought they'd come out at like 403.
Oh,
but
okay.
The company sees first quarter revenue $360 to $370 million. The estimate was for $358.7 million. Shares this year, Carol, are up already 32%. So, they was priced for perfection.
They're going to get a little haircut because they're down about 12% here in the aftermarket.
Hey, speaking of a haircut, what happened with that inflation rate today? U.S. inflation picking up broadly at the start of the year, further undercutting chances of multiple Fed interest rate cuts this year. At the same time as the Trump administration presses forward with tariffs, those eggs, prices surging more than 15% in January from a month earlier, the biggest advance going back to 2015, up 55% from a year before. That's according to the U.S. Bureau of Labor Statistics. For a check on how consumers are faring in this economy, we bring in Scott Zoldi, Chief Analytics Officer over at FICO. It's the analytics and credit rating company. He joins us here in the Bloomberg Interactive Brokers studio. You see a lot of data. You comb through a lot of data. How are consumers doing?
So consumers, there's definitely still a lot of sort of focus on, prices and inflation, right, in terms of how they are transacting with their payment cards. We primarily look at consumers with respect to fraud detection. And so as part of that, we look at what are those patterns, how are they changing in terms of whether or not they are being susceptible to fraud. And we use machine learning to do that, to make a determination of whether or not they are experiencing fraud or not fraud in these difficult times.
How often is that happening?
So essentially, with each and every transaction that occurs, there's a decision that gets made with one of these machine learning models that will make a decision between, fraud or not fraud, and it's automated. So every time you swipe your card, a decision gets made. And these are technologies that we developed more than 30 years ago, and they continue to serve well in basically that infrastructure protecting payment cards.
Where do you play in the ecosystem? For example, if I use my American Express, if I use my Chase card, are you there behind the scenes?
So we're behind the scenes for many of those banks, right? And so essentially the way it works is that we're an analytics software company. We pioneered the use of machine learning more than 30 years ago in the detection of fraud. And we operationalize AI, which is a really difficult problem today in this sort of golden age of AI, actually making it practical and usable. We build those neural network models, and then we install our software at many of the banks. And then the banks use that score, which goes from 1 to 999. The higher the score, the more likely it is fraud, in a strategy in terms of whether they block a transaction and for suspected fraud.
We've all been there, right? We get a call, and they're like, hey, is this you? We want to check like a fraud alert. Hey, Scott, what I do wonder
How did you spend, $1,000 on those 2 dozen eggs that you have at home?
Listen, sometimes it's like, I'm like, honey, is this you? And I'm like, it's fraud. Hey, Scott, one thing I do wonder is in an economy, I'm wondering when things are going well, is there less fraud or more fraud? In an economy that might see consumers pulling back, is there less fraud? I'm just curious.
Yeah, I mean, fraud is essentially always there, right? I think,
but the level of it, I'm curious.
The level will generally increase, right? When we see sort of harder, more difficult times, and so like there'll be more people that will take advantage of fraud, and so they may play a role in the fraud. We call that muling, where someone will transfer money in terms of a fraud event, and so definitely it makes for harder times. People will turn to crime. Now, with that said, most of the fraud is committed by sort of organized data science teams, very specialized individuals, but they're always looking for recruits, and those recruits will help facilitate that fraud, whether they'll capture details or whether they'll allow money to pass through their accounts to the eventual beneficiary who is a fraudster behind the scenes.
How are you doing with recruits? Everybody wants people who work in AI right now.
Yeah, we're doing really well, fortunately. I think FICO has a great reputation as an AI and machine learning leader, and we operationalize those models. So instead of having an academic conversation about the use of AI, it's actually deployed. And so most of our staff have been here for more than 10, some 20 years.
Well, you said that you've been doing this. This technology has been developed, for decades. How much has it changed in the last couple of years since we've seen the huge jump that ChatGPT at OpenAI was able to make? You've seen the development of Anthropic, these other LLMs, and the rise of NVIDIA as well. How much has that improved your AI models?
So, this is an area where you constantly have your adversary, the fraudsters, with their own AI models, and they're trying their own innovations to steal better. For FICO, we have more than 100 patents in AI and machine learning that we've evolved over the last 30 years. When it comes to things like transformer technology, we're constantly evaluating bringing that in to improve the technology. But the amount of energy that we spend on innovation is immense, right? Because it's basically an arms war between those data scientists on the dark side and those on the light side. Things like NVIDIA and transformers, these are opportunities to try new technology and layer it into what has already been working and working well behind the scenes.
Scott, one thing I do wonder, and with fraudsters, I've heard that, they'll basically try a small charge and see if it goes through and then amp it up. But what is the typical pattern, or do they just go for a big spend? How does it work?
Carol's trying to do some crimes.
No. I mean, the one thing we went to, it was like somebody bought tickets to a Vegas show, and I'm like, I haven't been to Vegas. Honey, have you been? And he's like, no. So but I'm just curious, how do they do it so they can get it through?
So they're going to try to take a transaction that is not obvious, right?
Yeah.
So they're not going to necessarily go for the big ticket item at the jewelry store or something else that's kind of
LVMH
obvious.
bag or something.
Correct. So they might slowly ramp it up. And so what we're looking for are things that are out of pattern for a cardholder. So we maintain a profile of use for each and every cardholder. We understand what they're likely to do and what their expected next transaction is. And so when we see something off, we measure it and we calculate it, and they'll slowly ramp up. Now, with that said, if you wanted to get into fraud, the very best way to do that, girl, is...
I don't.
Okay.
No, but I'm just curious.
He was going to tell us how to fraud.
That's not what I meant. I'm just curious how they do it.
Yeah. That's what somebody who wanted to do fraud would say, Carol.
Yeah. So, but here's the thing.
So many words I want to say, but I'm on air.
So the more heinous sort of crime is actually called scams. And scam is where I trick you to sending me money. So I don't have to steal your information. I can social engineer you.
Do people really do that?
I get texts every day.
But you don't bite.
Okay, well, today I got one that actually said Tim.
Okay.
Yeah, it didn't bite. But still,
I mean,
it's getting better.
Do people really?
It's a huge problem. So, for example, they target the elderly. Those are a little less sophisticated, and they're very successful. And what's really damaging is sometimes they can empty out entire bank accounts, right? And so it's a really heinous sort of crime. So we all have to be on guard, and that's why we detect scams, and we have technology that tries to understand human behavior, use that machine learning, make predictions, and just give the banks, financial institutions, tools to protect consumers.
All right, so.
Go ahead.
30 seconds. Are scores going up or scores going down? I've got to ask you, you see the analytics. Are people stressed? It's a great indicator of the economy.
We're seeing drops in the number of transactions. So in terms of the number of sort of discretionary transactions that are occurring. So I think there is the stress, and we're seeing that in the payment data.
All right, we knew we'd get there. Thank you so much. Love the data. Did you want to say something?
No, go ahead.
You sure?
Yeah, that's it.
I am not a scammer. I'm not looking to do it. I'm just curious, how people think about it, because there's so many systems in place. Just wait till you're off air, Stenovic.
Oh, I am. I can't wait. Scott Zoldi is Chief Analytics Officer over at FICO, joining us here in the studio. Hey, a redhead crossing the Bloomberg terminal. Royal Caribbean approves a $1 billion buyback, also boosts its dividend by 36%.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Lots of after-the-bell headlines. Cisco Systems out with an upbeat sales forecast for the current quarter. Shares right now of Cisco Systems up 6.1%. Robinhood Markets reported revenue that more than doubled as the online trading firm was boosted by crypto market transactions. Also, Meta shares closed higher today, extending the streak of gains to 18 days. CVS up 15% today after earnings and the biggest one-day gain since 1999. Just getting word from Reddit, fourth quarter user growth missed Wall Street expectations. And Royal Caribbean, the cruise line company, announcing a $1 billion share buyback. S&P down 16, down 0.3%. The Dow down 225, down 0.5. NASDAQ higher by 6 today. That was little changed on the day. 10-year 4.62% with the 2-year 4.35%. Gold little changed, up less than 0.2%. 29.02 the ounce. West Texas Intermediate crude down 2.9%. 71.24 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Some news today, McKinsey pledging to prioritize diversity across its workforce. This despite U.S. President Donald Trump ordering his government to push private firms to scrap DEI policies. Carol, McKinsey seems like it's in the minority right now, and I think that's why this is news.
Exactly.
Check out some recent headlines. You just go to Jeff Green's bio page, who covers diversity here at Bloomberg, and here's some of the stories that he's had a hand in. Shareholder advisor ISS, Institutional Shareholder Services, kills diversity criteria for boards. Booz Allen scraps DEI programs in reaction to Trump orders. Goldman scraps diversity rule for IPOs in latest DEI retreat. Accenture abandons diversity targets, citing Trump's orders.
Yeah, we definitely have seen a trend in terms of organizations, companies, institutions, like really just, kind of rolling back their DEI efforts, or at least publicly saying that they are.
Aurora James is the founder of the 15% Pledge. It's the organization that works with companies, at least in its own words, to, quote, implement meaningful change and create greater equity for Black businesses, including designating 15% of their shelf space for Black-owned brands. We've spoken to her before. She's back with us from Los Angeles. Aurora, how are you?
I'm so well. How are you guys doing?
We're doing really well. I'm wondering your reaction to what companies are doing. I read some of the headlines right then. It seems like a real sea change from the conversation we would have been having with you about 4 years ago.
Yeah, I mean, it's really disappointing to see a lot of these major corporations do these, what I kind of like to think of as PR rollbacks. Target and Walmart, I don't think that they're necessarily, the places that we always think about as being that diverse. That being said, it's disappointing when we hear any major corporation want to roll back diversity, equity, and inclusion. And I think, the thing that I know to be true is that consumer sentiment and consumer values haven't changed over the past 4 years. We still know that people are more interested than ever in shopping with their values. And so I think every corporation that we partnered with at the 15% Pledge, whether it's Sephora or Nordstrom, are really proud to continue with these commitments.
How do we know that? What are the data that we have that say that customers actually care about this stuff?
Yeah, there's a lot of data, actually. You mentioned McKinsey earlier, and they did a lot of consumer studies a couple of years ago. And so I really urge people to look up that information, because I think there's a misconception that everyone that voted for Donald Trump doesn't believe that, differently abled people or women or diverse peoples shouldn't get a shot. And I think for me, I truly believe that everyone just deserves a chance at the American dream. You guys have all heard this saying before, that talent is distributed equally, but opportunity and access is not. I think DEI programs are just making sure that everyone gets a chance.
So I am curious, Aurora, do you think that companies are saying one thing and still maybe doing something different internally? I'm just curious if you've been able to do kind of a temperature check on things, because I think we're trying to figure it out. Is it just a case of publicly saying, okay, this is kind of what seems to be the mood, certainly out of the federal government, but we're going to still do this internally? What are you hearing? What are you seeing?
Yeah, I mean, I know that they are, to be honest with you. You know, we just had our big annual fundraiser that happened. It was our most successful one to date. We had a lot of major corporations in the room, including a lot of people who, you know, were also represented at the inauguration. And I think at the end of the day, like, we know that we need to have diverse voices at a table so that we can do the best business, right? Like, the consumer base is broad all across America, all across the world. If we only have a singular point of view, we're going to be missing the opportunity to reach billions of people around the world. So I think really smart leaders know that that's the reality of the situation. I think that there's a lot of people that are kind of, you know, saying what they need to say in order to appease certain groups of people, especially if they have government contracts.
Well, I guess what I want to ask you is, you know, the train has left the station, right? We've been talking about DEI efforts for a long, long time and have seen, you know, companies, organizations put them into effect. You know, you can take down websites, you can say you're not going to have official programs, but do you think that the momentum, you know, kind of continues, that I think organizations, leaders think about diversity, because it is, you know, McKinsey has said it's good for institutions, it's good for organizations, it's good for the financial bottom line.
Yeah, I mean, we've worked with McKinsey for a really long time, and I've always believed, in my very first day that I launched the pledge, I explained to people that I think not only is it the right thing to do, I think that it's really smart for business, and that's what we've been proving out. So to be honest with you guys, I think there's a lot of people that looked at DEI as like a 2020 bandage and were never really committed to figuring it out, right? And I think that those who worked really hard to figure it out, like Sephora, have seen a lot of success and are unwilling to back down from that success. And I think that McKinsey is the exact same situation, right? So I think it's all about implementation, just like it is with any other system that happens within the corporate environment.
All right, we're going to leave it on that note. Aurora, thank you so much. Aurora James is the founder of the 15% Pledge, joining us from Los Angeles. Right now, we want to take you to the White House, a plate back of earlier comments by President Trump. Right now, he's talking about geopolitics, specifically Ukraine.
It's a shame what's happened to that country. It would have never happened if I were president. That I can tell you. Would have never happened. It's to look at that. And October 7th would have never happened either, by the way, the Middle East. But we'll get it. I think we'll get it. We'll get something done. We're going to be meeting, actually tomorrow they're meeting in Munich, as you know, and we're going to have some other meetings. And I'll be dealing with President Putin largely on the phone, and we ultimately expect to meet. In fact, we expect that he'll come here and I'll go there. And we're going to meet also probably in Saudi Arabia. The first time we'll meet in Saudi Arabia, see if we can get something done. But we want to end that war. That war is a disaster. It's a really bloody, horrible war.
With Saudi Arabia, the first meeting will happen?
I think so. We think we're going to probably meet in Saudi Arabia, the first meeting.
Any idea when?
Hasn't been set, but not too distant future.
Will you also be part of that meeting?
We both understand, you know, we know the Crown Prince, and I think it'd be a very good place to meet.
So it sounds like that would just be a meeting between you and Putin and perhaps the Crown Prince, but not President Zelensky?
Probably we'll have a first meeting, and then we'll see what we can do about the second meeting.
Did you also commit to go to Ukraine?
What about Ukraine?
Did you commit to go to Ukraine?
No, I haven't. I haven't committed to go to Ukraine. I would think about going. I'd think about it. No problem.
You say today, Mr. President, that they received your vision. What is your plan to end this war? Like today, Secretary.
Well, I'm not going to tell you my plan. I can just tell you we've made a lot of progress. This should have been done by Biden, not by me, because this has been going on for now a long time, years. And it should have been done by Biden. Just like the young gentleman that I brought home yesterday after 2 weeks. We worked on it for 2 weeks. He was a fine man, and he was in there for 3.5, almost 4 years, and they weren't able to do a thing, and I got him out. And as you know, I didn't pay $6 billion. I didn't pay anything. We did a trade, and we did a good job. We got him out in 2 weeks. It should have been out years ago. Really should have been out years ago.
Oppose NATO membership for Ukraine?
I don't think it's practical to have it, personally. I know that our new Secretary of Defense, who's excellent, Pete, made a statement today saying that he thinks it's unlikely or impractical. I think probably that's true. I think long before President Putin, they said there's no way they'd allow that. This has been going on for many, many years. They've been saying that for a long time, that Ukraine cannot go into NATO. And I'm okay with that. I just want the war, whether they are or they're not. But it certainly would seem to be that most people have said that that is something that's not going to happen.
Are you freezing out President Zelensky of this process a bit? Isn't there a danger of that?
No, I don't think so, as long as he's there. But, at some point you're going to have elections, too. You're going to have an election.
He says he wants security assurances, Mr. President. What does that look like?
In terms of what?
If the war were to end, he says he wants guarantees of security.
We'll see what that means. I think when the war ends, one thing he was very strong about, if it ends, he wants it to end. And that's President Putin said that. He wants it to end. He doesn't want to end it and then go back to fighting 6 months later. We talked about the possibility, I mentioned it, of a ceasefire so we can stop the killing. And I think we'll probably end up at some point getting a ceasefire in the not too distant future.
Do you expect Ukraine?
Say it, what?
Do you view Ukraine as an equal member of this peace process?
It's an interesting question. I think they have to make peace. Their people are being killed, and I think they have to make peace.
We will continue to provide.
I said that was not a good war to go into, and I think they have to make peace. That's what I think.
Why did you decide to provide support to Ukraine? Would you support Zelensky ceding territory or exchanging territory in any agreement to end the war?
Well, he's going to have to do what he has to do, but, his poll numbers aren't particularly great, to put it mildly. He's got a country where, it's been savaged and attacked, and he's got an army that's been very, very brave, actually, despite the fact that, we've given him, in my opinion, $350 billion. That's what the real number is. You don't hear that number. And Europe has given, in my opinion, $100 billion. And they've done it in the form of a loan. And I have a Secretary of Treasury right now who's actually quite brave. He's over in Ukraine on a train, and there's a lot of things happening around that train that aren't so good. And he's going there to get a document done where we're going to be assured that we're going to, in some form, get this money back, because we're putting up far more money than Europe, and Europe is in far more danger than we are. We have an ocean in between. Europe has nothing in between. They have in between, they have Ukraine in between. So wait a minute. So, as you know, Europe is putting up money, and they're getting it in the form of a loan. And the United States under Biden didn't do loans. They just handed money every time somebody walked in from Ukraine. They just handed them money foolishly. This should have never happened. It should have never started. And once it did, other things should have happened. Other things should have taken place. So we're getting security on our money. We're going to have it secured by, they have rare earth, and they have oil and gas, and they have a lot of other things. And we're asking for security on our money.
So does it mean you are not sending any more
They've agreed to it. Ukraine has agreed to it.
Does it mean you are not sending any more aid to Ukraine?
No, we are, but we want it secured, and the money is going to be secured.
When will the U.S. stop sending funding? When will the U.S. stop sending funding?
Because if we didn't do that, then Putin would say he won. We're the thing that's holding it back. And frankly, we'll go as long as we have to go, because we're not going to let the other happen. But President Putin wants to have peace now, and that's good. And he didn't want to have peace with Biden.
Was that conversation with Putin?
And you tell me why that is, okay?
Was that conversation with Putin to start these negotiations part of the deal to bring Fogel home?
No, but it was a nice thing that he allowed Mark Fogel to leave. In fact, Mark wasn't feeling well, but he was all of a sudden about 2 weeks ago, he started being treated very nicely. He said they took him out for haircuts. They took him out. They helped him out a little bit and made him feel better, made him look better. and they were nice to him. And he said, I saw something happening, and it coincided with when I came into office. So that was nice. And he's a fine person. He was so happy to be out. He was there for 3.5 years plus, and he shouldn't have been there at all. They should have had him out much faster than that.
What does make you believe that Zelensky will...
Wait, go ahead, please.
Sorry. Sir, just to be clear, do you see any future in which Ukraine returns to its pre-2014 borders?
Well, I think Pete said today that that's unlikely, right? It certainly would seem to be unlikely. They took a lot of land, and they fought for that land, and they lost a lot of soldiers. But it would just seem to me, and I'm not making an opinion on it, but I've read a lot on it, and a lot of people think that that's unlikely. Some of it will come back. I think some of it will come back. Yeah, some of that land will come back. Who are you with?
Sorry, me.
Yeah.
AFPs.
You who?
AFP, Agence France Presse.
Okay.
I just wanted to ask you, the things that the Secretary of Defense was talking about, the 2014 borders and the lack of NATO membership. Ultimately, these are both demands that Russia has made in the past. Is there not a danger of handing Russia a kind of win on this?
Well, I think that if you look at the war, the way the war is going, you'll have to make your own determination. I'm just here to try and get peace. I don't care so much about anything other than I want to stop having millions of people killed. Last night, Kiev got hit very, very hard. I want to see people stop getting killed. That war is ridiculous. It should have never happened, and it would have never happened. Yeah, a couple of more questions.
Are you planning to sign? Are you planning to sign an executive order on reciprocal tariffs, sir?
Yes, I am. In fact, I may do it today, and if I do it today, I could almost do it right now. Would you like me to talk about it now? I don't want to take anything away from this young lady's day, because this is her day, and I may do it later on, or I may do it tomorrow morning, but we'll be signing reciprocal tariffs. The world has taken advantage of the United States for many years. They've charged us massive tariffs that we haven't charged them. And as you know, I just did something on steel and aluminum, 25%. That'll go up at some point, but 25%, which will level the playing field quite a bit. I did it previously 50%, and Obama was very weak, and Biden was even weaker on steel. The steel was just absolutely, it really started with Obama. The world really took advantage of us, and then that morphed into Biden. And what they did was he was so worried about trying to attack his political opponent that he didn't know what he was doing with respect to countries taking advantage. He should have looked at the countries, both friend and foe, taking advantage of us. So we're going to be doing reciprocal tariffs, which is whatever they charge, we charge, very simply. But we're going to be...
Considering exemption, talk about widespread fraud and abuse.
Oh, yeah, tremendous fraud. There's tremendous fraud. And it's hard to believe that you can have that kind of fraud. You're talking about, like, are you talking about what? Wait. Which are you talking? You're talking about with regard to all of the investigations that are going on about this stupidity. What we're going to do is tomorrow I'm having a news conference. I'm going to read to you some of the names that hundreds of millions and even billions of dollars have been given to. And if you tell me that we should be giving money to those things, those entities, I think you'll probably have to leave as a reporter because you're not very talented. When you look at the kind of money, billions and billions of dollars being thrown away illegally, and there's no chance. I mean, I say it in front of our Attorney General, there's no chance that there's not kickbacks or something going on. When you give millions and millions of dollars to somebody that stands to look at something for 15 minutes and walks away with millions of dollars, that money's coming back in some form. And that's only one form of corruption. The biggest thing is what they do to our country. They're taking massive amounts of money and spending it on items. I went through a list of 200 expenditures that were made, and I found 3 that looked like they were reasonable. Okay, 3. And we'll be talking about that tomorrow. We have a lot of stuff. And I want to commend Elon because he's done a fantastic. He doesn't need this. You know, he's abused by you people every day. He's found more things than anybody could find. I think he's got the credibility to do it. I know he does. And it's his group of people. You know, they started off with 12. I call them 12 geniuses. They started off with 12, and they went to 20 and 25, and now they're up to almost 100. People are joining to help them because there's a massive fraud that's taken place. And then you have judges that are activists, and they sit there and they say, oh, as an example, $59 million going to a little small group in New York City. You get nothing going to North Carolina to help nothing. They say, we don't have any money because they've given it away on the border. But you have nothing. What they did to North Carolina is a shame. And then they sent $59 million to New York City for a hotel for a little bit of nothing. What they've done, a hotel that was not luxury, that's getting luxury rates for migrants, where they're making a fortune, and we catch them. But a judge says, well, even though it may be a fraud, you have to send the money in anyway. Send the money. I said, wait a minute. We have money that shouldn't go because we caught it before it was sent out, but they want the money to go anyway. And I think you're going to have a lot of things to look at, Pam. I really do. What's going on with this whole thing? And this is just one group. We haven't talked about Department of Education. We haven't talked about the military. We haven't talked about a lot of things that are very big. And what's happened is, as an example, you'll have cases where you have a 3-month contract, and maybe the guy that signs the contract leaves. Maybe he gets rich. All of a sudden he leaves for that reason. But you have a 3-month contract, and maybe he leaves. So the contract is sitting there, and the people signing the checks don't know it's 3 months, and it goes on for years. The 3 months turns out to be 3 years, 5 years, 10 years. Just goes on forever. And the guy on the other side of the contract just keeps getting check after check after check, because Elon had an expression yesterday, because nobody cares. It's a great expression. Nobody cares. The guy that signed the contract didn't care. Maybe there, may not be there, maybe crooked, who knows. But you have to care. Otherwise, you can't really run a thing like that, or you can't run a country, really. Because there's so many transactions, thousands and thousands of transactions. And if you don't have people that care, you're going to lose control. And that's what's happened. And we've caught it. Now, what we caught is billions and billions of dollars, but it's a tiny fraction of the real number. Because you can never catch the real number, because people have gotten away with tremendous amounts of money. But I said we have to make our government smaller, more efficient, more effective, and a lot less expensive. And we could find $1 trillion, but we're being hindered by courts where they file in certain courts where it's very hard to win, and a judge will stop us, and a judge will say that it doesn't make any difference what you find. You just keep paying the money. That's a hell of a way to be. And I follow the courts. I have to follow the law. All it means is that we appeal. But that gives people time to cover their tracks, and that's what they do. So it's a very bad thing that's taking place. But hopefully, if the courts, the courts will be fair. They don't have to be very fair. They just have to be a little bit fair, because this is so egregious what's taken place. Nobody's ever seen anything like it. Nobody's seen numbers like this. These are massive numbers. $9 million for somebody to go and stand in a store and see how people shop. Okay, I mean, you take a look at these things. It's a disgrace. And then you have a country that we want to make America great again. It's very hard to make America great again when you have things like this. And you're going to see the same thing. Department of Education is going to be a disaster. The military, I mean, I see it. Look, I came in, they had a contract done, as you know, for $5.7 billion for airplanes. It was Air Force One with Boeing, 5.7. I got it down to $4 billion, little less than that, 1 penny less than that. $3,999,999 and 99 cents. I said it has to have a 3 in front of it, because I wouldn't sign the contract for $5.7 billion. I was able to cut $1.7 billion off the price, and it didn't take me long. $1.7 billion. If people would care, they'd be able to do that with every single contract that's put before them. And we wouldn't have deficits, would have nothing but a tremendously low-taxed wonderful country, but they have to care. And speaking of that, you know, Boeing, we're not happy with the service we're getting in terms of those planes. They would like to get more money. We're not happy about that whole thing. We signed a very strong contract. I signed a guaranteed maximum contract, which they haven't seen in a long time. And they're saying they're getting hurt by it. But they have to produce the product, and we expect them to produce the product. They have to produce the product. They agreed to build planes at a certain price. They're not used to that. They're used to having time and material contracts where it's whatever it costs, time and material, no dates, no anything, and it ends up costing 5 times more. You look at some of the ships that have been built. Take a look at the Gerald Ford, the aircraft carrier, the Ford. It was supposed to cost $3 billion. It ends up costing like $18 billion. And they make, of course, all electric catapults, which don't work. And they have all magnetic elevators. They lift up 25 planes at a time, 20 planes at a time. And instead of using hydraulic, like on tractors that can handle anything from hurricanes to lightning to anything, they use magnets. It's a new theory. Magnets are going to lift the planes up, and it doesn't work. And they had billions and billions of dollars of cost overruns. I met the architect. I said, have you designed a ship before? This is one of the biggest ships in the world. It's like landing at LaGuardia Airport. But you look at the kind of waste, fraud, and abuse that this country is going through, and we have to straighten it out. We have great people going into the military in terms of we need ships, we need a lot of things. We have great people we have business people going in. But when you look at what's happened to our purchasing, and when you look at the USAID, when you look at the things that they're giving to them, the billions of dollars that they're giving to, and it doesn't make sense. It is interesting that when you're looking for fraud, you look at items, hundreds of items, and you'll find 1 or 2, maybe, if you're lucky. Here's something where you look at data, and they're all fraudulent. You know, by just looking at the topic, they're all fraudulent, except it's the opposite. You'll find 1 or 2 that's like a legitimate reason. So I just want to thank Elon for going through it. I want to thank all the people that are working with him. You know, we have a big group of people. I think the lowest IQ is about 160. That's very high. I think you have a couple of 182s in there, but they're doing a fantastic job. He doesn't need it, and they don't need it. But we're showing things, and it's going to be a big. People have no idea how important it is. Yeah.
How soon do you want the Department of Education to be closed?
Oh, I'd like it to be closed immediately. Look, the Department of Education's a big con job. We're ranked, so they rank the top 40 countries in the world. We're ranked number 40th, but we're ranked number 1 in one department, costs per pupil. So we spend more per pupil than any other country in the world, but we're ranked number 40. We've been between 38 and 40. The last time I looked, it was 38, and then I looked 2 days ago, it came out the new list. It came out at number 40, so we're ranked 40. Norway, Denmark, Sweden, I hate to say it, China, as big as it is, it's ranked in the top 5. And that's a primary competitor. We're ranked number 40. So if we're ranked number 40, that means something's really wrong, right? And I say send it back to Iowa, to Idaho, to Colorado. Send it back to places that, and a lot of Indiana. You have a great new governor. You have a great senator that Jim Banks just got elected. You got great people. I'll tell you what, Indiana's going to be fantastic. We probably have 35, maybe 37 states that will do as well as Denmark, Norway, Finland, Sweden. They'll be just as good. Then you have the ones that we all know about. It'll be the same story. But you know what? Even they will be good. Because you look at New York, you give it to Westchester County, you give it to Long Island, you give it to Nassau County, you give it to Suffolk County. Same thing you go out to, and you give it to upstate New York. So you'd have 4 or 5 sections. You give it to Manhattan. Manhattan's a little bit tougher for some reason. I don't know why it would be tougher, but it is. You give to California, and you go to various areas outside of Los Angeles, and you might have 6 or 7 different subgroups. But generally, like if you go to Iowa, you give it to Iowa. You don't have subgroups, you have Iowa. And other places that do a good job. If they do a good job, they're going to do a great job in education. Those places will be every bit as good as the various countries that do so well. All the time, it's the same countries that are doing well. And so we have a Department of Education where people from Washington, D.C., who in many cases don't care about the kids out in the country. They don't care about the farms and the farmer's daughter and the farmer's sons. We have a massive bureaucracy in Washington, D.C. We have buildings that are all over the city. Department of Education. I never said Department of Education's on all these buildings. By the way, nobody shows up to work because they're all working at home. You know, quote, working at home. They're not working at home. And a lot of them have second jobs. And that's the other thing that Elon Musk is looking at. How many of these people are getting checks, working at home, but they're not working because they have second jobs and even third jobs? You're going to find a lot of them. And those people are going to be fired because we have to make our government smaller. All right, one more question. Yeah, Jennifer, go ahead. Nice to see you.
Thank you, sir. Two questions, one on Ukraine again, and then another one on the Kennedy Center. Do you think that as far as your negotiating tactics go, did Pete Hegseth take away some of your negotiating abilities with Putin by taking Ukraine's sovereign integrity off the table, by taking...
No, I haven't done that. I'm backing Ukraine. I'm backing Ukraine. Don't say that. I'm approving, but I do want security for our money. You know, Europe is getting security. You know that, right? They're giving their money in the form of a loan. Nobody knows that. And why are we at 350 billion and Europe, which doesn't separate with an ocean like we do, we have a little thing called an ocean in between. Why is it that Europe is paying 200 billion less than us to help Ukraine? Very similar size. If you add up all the European countries, it's a little bit smaller than the U.S. in terms of the economy. Why is it that they're not paying the kind of numbers that they should be paying? And then on top of it, and I've been saying this to Biden, I told Biden, I said, you ought to be asking for either a loan or some kind of a security, like their oil and gas or something for the money, because you're putting up much more money than Europe, and you have no security. Europe's putting up a much smaller amount, and it's in the form of a loan, because we have people that were incompetent in the last administration, grossly incompetent, and we're changing it. But we change it, and all we do is we get hit by lawsuits from the radical left all the time. But here we are. We stand, and I guess we've done okay. Thank you very much, everybody. Thank you. Thank you.
All right, everybody. You've been listening to President Trump from the Oval Office talking about a variety of things, including saying that he may do reciprocal tariffs later or tomorrow morning, but expected to hold another news event or event to announce things tomorrow. What's interesting, too, though, the president, again, that was a playback. These comments were earlier this afternoon, but he did talk about his call with Vladimir Putin, saying it was over an hour this morning. He says, I think we are on the way to peace with Russia and Ukraine. He will deal with Putin on the telephone. He also said that a Putin meeting in Saudi Arabia, he will be meeting with him, he says, for the first time. That has not yet been set. So he also talked about NATO membership, saying he doesn't think it's practical for Ukraine.
Let's get more, and we go to Bloomberg News national security reporter Nick Wadhams, who joins us to explain exactly what he took away from those comments from the president. I do want to start with Ukraine and Russia. Nick, did we learn anything more about a potential timeline to the end of this conflict?
There's no on the end of the conflict. We do know that President Trump plans to proceed very quickly. He said he expected to meet with Vladimir Putin in Saudi Arabia in the relatively near future, and seems to have pretty explicit ideas. I mean, his defense secretary, Pete Hegseth, earlier in the day basically laid out the U.S. position, seemed to take NATO membership for Ukraine off the table and concede that Ukraine's not going to get all of its land back, and he also said the U.S. would not commit troops. So the U.S. is beginning to roll out the sort of vague form of a Ukraine policy position. And the key thing here really is that they are essentially saying this is going to be a U.S.-Russia conversation. That's a big shift from the Biden administration, where they said, nothing about Ukraine without Ukraine. They wanted Ukraine to be at the center of these, because this was obviously Ukraine that got invaded. So we're seeing a lot of big shifts. He's showing very explicitly he wants to move fast, but no timeline yet.
All right, where does President Zelensky fit into this? My understanding is that he also talked with President Trump.
Yes, so they talked after the Trump-Putin call, which, really as a symbolic gesture, it's difficult to overstate how big a deal that is. That President Biden had refused to do that conversation. So Trump speaking with Putin, he then did talk to President Zelensky, who's playing it pretty cautiously. He said he had a good conversation with President Trump and looks forward to working with the U.S. president. And Treasury Secretary Scott Bessent is in Ukraine right now. They're trying to do an economic partnership deal. And what you're seeing there is essentially the U.S. looking to secure Ukrainian mineral resources in exchange for sending more aid to Ukraine. So you're seeing just a big shift. This is not going to be a freebie, and Trump's making that very clear.
What did you make of the numbers that the president threw around? $350 billion, I believe, is what he said as far as U.S. aid provided to Ukraine. But he alluded to, yeah, go ahead.
No, I mean that is not the number we understand is significantly lower. For it's not there's military aid, there's humanitarian assistance, there's aid that's meant to help with corruption. So it's unclear to me exactly. We still need to run the numbers on where President Trump got those numbers. But in terms of the actual economic aid to help Ukraine's military, that's pretty exaggerated.
How do you read the tea leaves? Because this is happening, this phone call, right after we saw the release of Mark Vogel, who was in a Russian prison, an American teacher. And I'm just curious, kind of the optics of what we are seeing and how this is unfolding.
Well, I mean, the optics are just a huge shift. So the U.S. had pushed to do prisoner swaps with Russia, but you'd never seen a situation where a U.S. envoy, in that case, Steve Witkoff, who is nominally Trump's envoy for the Middle East, he went to Moscow, reportedly met with Vladimir Putin, came back with Mark Vogel on the plane. You also had another deal where an American was released from Belarus, a U.S. ally. So what you're seeing is essentially the jump-starting of a flurry of contacts between the U.S. and Russia. That's something that we really had not seen in the last several years. There had been those exchanges, but they had always been done through intermediaries. So I think